Actually, no, there's 4.
Hmm.
I've cracked the code.
Hmm.
We're actually hitting that trend line from last Friday, I believe.
Oh yeah.
Yeah.
Like it's coming down to sit on top of it.
Yeah, just about, yeah. Looks like
Interesting.
it might be breaking, actually. Well, it might attempt to break it, we'll just see.
Yeah, like right now, on this chart, I've got a red zone and green zone that it's used a long time ago, and essentially it's got very minimal space left with this yellow line. So breaking it to try and test this node again could be on the table here on the short term, which I mean, that could be tradable. I should have taken it. Yeah. Yeah, yeah, no, that's okay. But I mean, it's like that right shoulder, like you were saying as well. It's just taking its time with it. Hopefully, it doesn't take as much time as the left shoulder. Definitely can, but yeah, but not bad. The ATR looks like it's pretty decent. Oh, no, it's average, 11 this time of day.
Yeah, it's not too bad. Tell you what, that thumbnail looks good.
Thanks, man. Yeah, I appreciate that. Basically, we're in the process of retesting the trend. You can see that all it wanted to give was just that move back to that point, and it was pretty clear that it wanted to do it. Now you can see it's pretty unforgiving. At the end of the day, how was it when it formed its first shoulder? I mean, it was very much like it is now. I mean, it decided to chop back into itself. Like, think about from the beginning of that shoulder, how many times did it jab back and jab back and jab back and then jab the whole thing back? I'm like, geez, give them a break. And then just take everything back and then take that back too and then that back and then you can have it. I'm like, wow, that's tough. So I'm like, yeah, is it going to be just one straight shot on the right shoulder? Incredibly unlikely. But it'll set short-term targets that it'll run into like that. Because look at it, it's a giant node right there, right? And it responded to it. The only reason why that node exists is because it went sideways for so long in here, and it's grown this area is like basically a level that has had so much volume added that it's like a wall now. I mean, it's just responding to an area that it has responded to before, and I mean that's a lot of support and resistance barriers are made like that, right? So it's some barriers can be made having never been there. Like we can have barriers up here, that aren't because we're running into other price levels that we've been to, but projected price levels like Fibonacci levels, that extend farther beyond the existing price. So it's like, back when I was at all-time high, when I was first starting trading, like it would seem to be an all-time high every day. It was like every day we just kept going up, 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 up. I was a long-term investor at the time, so it was okay, but it certainly wasn't buying low. I never got to see what low looked like, And it's like you just had to fit yourself into the mix somewhere, and it was interesting when it was constantly forming a bearish pattern on the long term, yet it would go up all day by making a bearish pattern throughout the day. It was very strange. Very strange. It would make this pattern on the daily, or sorry, and it would never go down. But during the day, it would play out all the time. So it's like people that familiarize themselves with a pattern that otherwise worked so well on the short term. If you tried it on the long term, there's like a 70% chance it wasn't going to work, which is kind of high. And I definitely learned that the hard way, because I was like trying to capture exposure to the big rising wedge, and every day I would come in and short the intraday rising wedge, but anytime I tried to get like a long-term position, it always went south because it never came down until there was some big news event or whatever, and then it all changed. I think it all changed when Trump came in, really. Like it really changed when China trade wars started. Because that was when the whole Robin Hood scene, I think, was developing as well. And that's when like all the average people that really had no interest in trading suddenly had accounts. And the world never really saw that before, because everybody that was trading beforehand was like somewhat semi-professional. They weren't nothing was a joke about it to anybody, until that meme phase. And then the market seemed to treat the cheat sheet a little differently from then on out. And the cheat sheet is what the average person used to find success over the years. And, they would never want to change it, I would suspect, but it was changed on them. I can prove it. So I prove it every day almost. So it's like, I don't even really try to go for that anymore. I'm just going to pour this coffee. Ruined forever.
Oh god, I need a coffee machine in my room, I swear.
Lovely. So I suspect that the day will go like this. The beginning portion it is going to be slow, and it's normal, and it's extra important for today to be like this because it deters the people. And I think it's really important today because I think the institutions by the end of the day are going to be making it safe for themselves for this report tomorrow. And I think it's going to involve bringing it up so they can capture a hedge and then putting it back in the middle so that the hedge remains in a relatively neutral spot, and then it holds through the night into the report in the morning. But they're not going to give up their long trades for this report. Over, that's like I can see the people that bought those positions rolling in their graves. I definitely don't want to give those up. And if they're part of the institution, any institution that's been holding for a long time, they have major control over these businesses, and I don't think they'll give it up because of some report. And I don't think they'll give it up because they can't handle the dip on the report either. They're gonna make money on it, if anything. But then it's not going to be them giving up their position. It's about how much of a position you can really accumulate, and do you have the ability to manage it? That's the that's what they're playing. So because the position size on their core just keeps getting bigger and bigger and bigger. Because where do you think the hedge money goes? More assets. They buy more assets. They buy everything, and at least they should if they're good. They want to control as much as possible. They want to have as much say as possible. That means they know what's going to happen first. That means they can prepare. They can hedge first. If they own all the companies, then all the CEOs have to answer to them, and they know when something's going to happen, when something goes wrong, and you best believe they're going to tell the owners, or they get fired. Because the owners can fire them, which is ironic, because they run the company. You would think, no, the people that have all the shares do. And if one entity has all those shares, well, they kind of own the company. So it seems to be the case with a lot of these big entities nowadays. I don't think it's very fair, but I guess they needed the money to get going, and now they're owned by people that own everything. That's okay. That's what we do as humans. It wasn't the king owning it all. It's these guys. And we have to work around them. It's not just the individuals we have to consider anymore. Like if you look back in the 1930s and stuff like that, we didn't have to consider big hedge fund institutions and so on like that. We had to consider maybe big players in the pond, but not really what we have today. Not a display of events that specifically affects the pool of knowledge of the average person negatively. And you can see that it works with absolute precision to those that see it mathematically. And I'm like, well, that's interesting. So it motivates me, and it's like it should everyone as well, because you don't want to feel bad about the the individuals. You have to understand that you may start as an individual, but you don't want to end as one, and that's the whole idea. You may not work for an institution, but you should be able to by the end of it. That's the idea. I kind of have deja vu with this line. I subconsciously dragged it over here with this new trend being formed. It is a fact that just like our last trend, until it breaks, we are contained within a downtrend. And I mean, it's not very steep, but it doesn't have very much time left. So it has to make a decision. Either it continues to hold this yellow line infinitely down, right? Or the green zone. Because it can't pick both, can it? So something is going to have to change in this little area. So I'm like, oh, okay, I can wait that. Perfect, let's see. Because obviously anything inside of that area is not worth it. Unless you're going for that, I mean. But no. Nobody should be going for that. Because, I mean, you think about it. The best traders in the world right now, you think they're making the big bucks in this range? No, no, no. Not happening. Nobody's making anything in here. Wow. barely anything if they are. In comparison to the moves that the market can make, these are small, is basically what I'm saying. It doesn't mean it will end that way. When we get out of this area, this small containment area comes to an end. And it happens on all time frames, just like we, can be running into a support barrier that has a VWAP underneath. Like this is a VWAP that basically, since the beginning of that VWAP, since all the way over here, all of the average, okay, so all of the shares traded, all of the contracts traded since that point, this is the average price. So technically, if you're buying below that level, you're getting a better price than everyone that's traded since that point. Not to mean just because you're below it, you should trade back to it. Doesn't mean that. But it's an added confluence for, let's say you find a bullish pattern underneath that level. It's like, well, you are not buying above it, which would give you a worse average price than everyone. And I'm like, that's another thing that deters me, gives me that gross feeling. I'm like, above the VWAP. I don't know about that. There's always a better trade. There's always one that's below the VWAP. Why do I settle for one above? I have a choice. And being picky is very interesting because I'm like, how is that not being patient as well? Huh? And selective and careful. Picky is not a bad thing. Like you'd hear it would be in common conversation. A great thing when it comes to math and when it comes to doing something that's dangerous, because you have to consider the uh, the dangers of the situation, the risk as they call it, right? And in an area that's really small like that, when the reward equals to the amount of risk that you have to take on, like, yeah, you're like, oh, I could trade it back and forth between these two lines all day. I'm like, well, okay, it's not very much points, but if you feel that confident, then you can do it. It's 10 points. But at the end of the day, we know it's leaving this area now. We know that its confinement to this zone has come to an end within that time because it doesn't have any time left. And I mean, that's just basic physics. I mean, if you I look at it like flowing water, constant flowing water, and you can put little barriers up in that stream, and the water will flow around them. But for the moment that like if you took a pipe and it had nothing obstructing it, the water would flow quickly through that pipe, no? But if you made like a bunch of ridges, like it was a maze, it would take a little longer for that water to get through it. And it works the same kind of way in this sense, where you can have a confluence of a bunch of barriers that obstruct the flow. Yeah, that's an interesting way to put it, actually. And I mean, that's what a barrier is. It obstructs its ability to continue flowing. And, what it does is in order to respond to a barrier effectively, we have to either spend some time at it or we have to respond, in the opposite direction. So if we're coming up to it and we see, oh, red zone is a barrier, it's not a very good barrier if it just does that, right? So it either has to go down off of it, which is responding in the opposite direction, or to show us that it's a barrier, it has to grind it. What else could it do to show us it's a barrier? Because if it blows right through it, I mean, it's not very much of a barrier, is it? Sometimes it does that, though. And when it does, it can be like, oh, that barrier, though, and then carry on. And you'll see that with the VWAP a lot too, where it's like, oh yeah, this VWAP is mighty important. Everybody's talking about it. Boom. And it's like, wait a second, the VWAP though. And I'm like, yeah, I've seen that so many times as well, where it's like this important barrier that's oh so obvious gets to it, breaks it. Well, clearly has to come back to test it. Kind of like what happened to this blue line, where it's like it has the audacity to run to it and then break through it. And they're like, no, 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 no. Test it 4 times now because they've made, that into a seemingly not so important barrier when it was. And watch it be used again in the future as something that doesn't break through it next time, but something that responds to it pretty accurately. Now another thing as well is, what about when we get to the height of the left shoulder? Like, is it still an inverse head, or sorry, not an inverse, but a regular head and shoulders, right? Like, people on the 5-minute are only just noticing it now. They're like, oh yeah, right shoulder. because it wasn't really formulating for them before, but now that it's taken the necessary amount of time, we have that going for us. Check the momentum, it's all relatively centralized. What about the other indexes? The SPY. Yes. Okay, that's weird. Let's take a look at this for a second. Do you notice this low right here? It's higher than this low in the Nasdaq. We go to the SPY. Why is it moving differently? It's got an M. Where did the M come from? I haven't even talked about an M yet. And what we have is a Head and Shoulders, and they have an M. Interesting. I'm trying to think about that. How could they complement each other? If the M plays out on the SPY and the Head and Shoulders plays out on Nasdaq, it's like the Head and Shoulders is subject to failure, and this is actually going to work. So what we have here is an M. This is a bullish harmonic pattern. You might see it on the internet looking like this. You can see that it's actually at a 1.78, so it'll be close to the 188. It'll be very close to the 188. Wow. It tried to be close to the 188. It wasn't quite there. But accurately, you can see exactly it is a 1.78% retracement. And, that basically, in order to get to that B point, it all becomes about the downtrend break. Because it's physically impossible to ever get to that green dash line unless we break this yellow line. So it's like, how do you position yourself for the break of the yellow line? If that's the door to get to the target, don't be surprised if it gets to the target when it breaks the line, because it can't get there any other way. So when it's breaking the line, it's like it's already opened the door to start the journey to the target. Not always does it run there just because it's opened the door. Sometimes it opens the door and closes it. It's like literally we just like, oh yeah, by the way, we want to make a fake out or something. And it's kind of doing that right now. It's like, yeah, the trend broke. We open the door, step through it, now we're back on the line. Undecisive of whether or not it wants to get out of the door. Very
on the Nasdaq, I'm pretty sure it hit your VWAP there too, because it hit mine. The one I placed overnight.
yeah.
Yeah.
Yeah, it's definitely becoming apparent that it's the right shoulder now, and I think that if we took a lot of time, well, not a lot of time, but some more time, it'll convince people just to short it. Now, fear is fast. Usually when people are like, get me out, sell, it's like the world is falling. The market falls fast. Usually when fear is involved, we get these like cliffhanger, like huge, like no remorse. Like they just come like all the way down. There's no retest to just, if you forgot to get out of your position, let me just retest here so you can just safely get out. They're like, no, crash instantly. Everybody's selling. It's a frenzy of selling. But then you get the gradual greed approach, where essentially we've been climbing up, gradually taking the staircase up, and then the elevator down. That's I guess you could say the old adage, stairs up, elevator down. Also, it's been notorious for Head and Shoulders to play out to the neckline, because like I said earlier, they can convince a lot of people to chase it. It seems like chasing is probably one of the largest common trading strategies of the public, because they wouldn't have to make so many moves that quote unquote deal with the tracers. But I see that those that chase just instantly get overlapped. And I mean, this was for them. Because when we convince people to chase, where they put their stop? Right here. And if somebody shorted down here, it's like not even at the 50 yet, first of all. It's not high at all. And they shorted, and essentially where they would put their stop is here. And that's a buy order. So if we push this to this high, they become buyers here, where anybody that's actually long from the green zone doesn't want to have to buy there, do they? Because it's a crappy spot. It's already like into the move. If you're trying to get the red zone, you don't want to have to buy there. So convincing people to put their stops right here is one way to start a move that could get us out of this range. Because one could say that this is the way that we like to consolidate. And it's by doing something so ridiculous. Inverse head and shoulders, and you could say that that was the left shoulder to both of them. Like, I'll drag it over here just so it's like easier to see. But like, what's up with that? Tell me that this pattern isn't this pattern in reverse, you know? And I mean, who does it do good for, you know, in this whole situation? Because is it not true that in the whole process it starts here, it ends here, and what does it do? Yeah, it makes a giant S wave. Because in all reality, isn't that what we're left with? So, is this a method of being able to do this in 2023? It's just a process, man. It's a process and a half. It takes like an hour to do it, probably more, probably like 2 hours. So it's almost done now, thankfully. But at the end of the day, we do grind the crap out of that centralized level, and what we're left with is a move that looks like this. We've got a spike out of one side and a spike out of the other side, and everything else is along this middle area. And you know, that's what I see when I see this head and shoulders, the inverse head and shoulders movement. We go 1, 2, 3, 4, 5, 6, 7, and 8 times. 8 trends all together. Not a single one of those trends doesn't touch this point. I'm like, wow. Well, better not put my stop at that point. It's definitely gonna get cleared out, right? So it's like that's the logic of that situation. I'm like, well, we know that there's 2 spikes in it, and they are roughly the same size. And in this case, you can even see that the spike out of the bottom with a consolidation and spike out of the top is very close to just making a head and shoulders, the inverse head and shoulders, just by showing that pattern. I mean, it's like these areas here, they're all consolidation. They're all the same. You know, they're all the equilibrium, the mean. This is a spike out the top, this is a spike out the bottom. It's probably a better way to show it. So just like the last trend, we broke it, came back, did a hard retest, right? Next trend, we broke it, came back and did another hard retest. Now, just like I readjusted that trend to begin with, we can readjust it again. And I mean, back in the day, we used to have to readjust that trend over 11 times before it moved. Constantly going back for it. I mean, if anybody took that trade originally that I didn't take, it's formulated multiple times already in this area. Not to say that it's an amazing trade by any means, but it is getting on to making this right shoulder. Roughly, you know? Roughly. For what it's made out of the bottom of this area, look at how it treats these people down here. It's very quick, very snappy, no volume, right? Well, low volume. They're the people on the extreme of the node it's showing. The extreme. And just remember where this pattern's pointed, right? Do you think this pattern would be more effective in a red zone or a green zone? Because it's a bearish reversal pattern. It's supposed to reverse an uptrend. So if we see this pattern where it's going, okay, if we see this pattern and it's going like this, it's completely different than if it does this. Completely different. In such a big way. Because this one has a trend to reverse. This one, it's not supposed to reverse downtrends. You know, if you've got it looking like this, then it's supposed to reverse a downtrend. But this is not what's happening there. So what happens when we put a bearish pattern in a really crappy spot? Well, there's a good chance it fails. And that means not going down for the people that are bearish on it. Because I'll tell you one thing, it isn't doing very good for them as of now. Like it's forming the pattern. Like I said, it's all about forming the pattern nowadays, not actually doing what the pattern's supposed to do. And of course it will in the future play out the patterns again. But when we look at the time of day, at the appropriate area where most of the people are trading, because they want to make a quick buck before they go back to the beach, right? You know, and and they don't have to consider anything in the market. It's so common culture in trading just to be able to make that money and then scoot out of the market and just escape. I look at it like it's like they're escaping, you know, because God forbid they continue, they'd lose money. And at the end of the day, that's lack of control. I'm like, well, what is the difference from you continuing that day and starting the next day? Do you not think it's going to catch up to you if it's meant to catch up to you? I mean, like, yeah, it'll catch up to you. It doesn't matter if you stop trading today or tomorrow. It's like, it's either you know what you're doing or you don't. And I'm like, well, it doesn't matter if you stop while you're ahead. You know, you just save yourself a little bit more time. That's basically the the way that I see it. Unless you learn how to manage it on a regular basis and stay in control, you know, and that's like a huge word. I think that people deserve more of in their own accounts. I think that you know you should try to strive for being in control at all times. And if it's ever a maybe, you never have that control, right? You don't have the control if it's a maybe. And and it's funny because like if you start trading and you learn like off of all the fundamentalists and so on, like they seem to make it very clear that that there will be times where there are maybes and so on like that. And the thing that's funny about day trading is you don't have to act on the maybes. You can act on the certainties instead. And you know, some of the fundamentalists will tell you that there are no certainties, but I'm like, well, that's a strong debate for sure. But I find that you can become incredibly comfortable with certain moves, and the more that you see them, the more comfortable you get with them, and the better you know you will be at determining whether or not they're going to fail. And there's nothing like knowing a pattern so well that you can determine when it fails, because that's power, it's control, and it means you understand the situation, you understand the environment. And I mean, the first step is believing that you can have that. As a fundamentalist will tell you can't. As they'll be like, nobody gets that. I mean, just because they don't get it doesn't mean you can. I mean, like, ridiculous. But I mean, that's how I was taught. You know, people telling me I can't do it, I can't do this, I can't do that. You know, it's like brutal. You have to go to school if you want to sit in this chair. That's what my broker said when I first met her. And I was like, yeah, right. No way. Because I didn't want to. I was pretty anti-school my whole life. I never wanted to do it, but good for some people, not for me. I'll do it when I'm old, when it's not for other people, not for the pieces of paper, but when I want to advance my intellect. Which people don't go to school for that anymore, it would seem. It's for the pieces of paper at the end. And it doesn't make sense to me. But regardless, this is a day where I think that, you know, it's appropriate to be a little bit extra choppy. So if you understand that, it doesn't get you get your hopes up for like you don't have that anticipation building, because we know that the whole day is anticipation for tomorrow's report. And I know that towards the end of the day today, the institutions they're gonna like wake up. They're gonna be like, all right, you know, everybody, it's getting close to the close. Every position that we have right now is at risk of drawback. How do we hedge it? How do we make it safe? Can we get our stop and profit on a hedge for the close? Because what does that mean for the assets? If you've got your stop and profit on a hedge for the close, does it matter if your assets go down? Because you're going to make a bunch of money on your hedge, and it'll counteract the amount that you're losing on the assets. And all that money that you make on that hedge, you can buy more assets with if you so choose to, if it falls enough. And this will be considered by somebody. And I mean, they have a lot of power in the market, and they're going to be thinking about that. I would like to think they wouldn't be in the position they are if they didn't. So we have to think, okay, if it's that important, that necessary to think about where you're positioned and how, you know, they don't have the liquidity to just pull out because of this report. It's just not something that I think is going to be on the table. And I don't think that after all the accumulation we've been seeing them doing, they're even remotely interested in that. They're interested in buying every dip, in my opinion, but they're also interested in hedging those dips as well, so making money on them. and it becomes a short-term battle. And it doesn't matter for them that they started as long-term investors and they, play these long-term games. It's a shocker to them when they have to get their fingers into the short-term market to be able to protect themselves. And I see that. I see how necessary it really is to get yourself into an understanding of the short-term market. Because how do you develop long-term positions if you don't understand the short term? Because the best way to get a long-term position is to battle the short term to get yourself the best price in the short term, and then to uh, to maintain it like it's that long-term trade that you initially fought for. But a lot of people, they'll look at the hourly and they'll think that it's going to go up, and the hourly could be like a 300 point range or something like that, and they just buy randomly, market buy in the middle of it. And I'm like, well, that's like it's incredibly dangerous. But they're just long-term traders though, so they don't consider the short term. And I'm like, just because in school and in life everybody categorizes us, they say, what do you want to be? The one thing that you're going to be for your whole life. And it's like everybody wants to specialize in this one thing and just do one thing. And in finance, it's exactly like that too. They find that you get your option traders or your stock traders, you get your futures traders or your forex traders, you get your long-term traders or your short-term traders, your bond traders or your stock traders. Here's a nice move as well. And essentially, anybody that's exposed to the new yellow line must make sure that you protect yourself on a move like that. um, but we're almost at the left shoulder level too, on a side note. But I think that it's imperative to have an understanding that the market moves the same way in the long term as it does in the short term. Candlesticks are printed, patterns are formed, the same way that they are on all time frames. If I took the time frame away and showed different charts, what's the difference? Could you tell me what time frame it is? If you had no idea about the market, like let's say I pulled up the Chinese stock market or something like that, and you had no idea what it looked like, and I showed you the hourly, I showed you the daily, I showed you the 1 minute. Is it not true that they're all presenting candles? They all move in the same fashion. They all move using the same methods and everything like that. And it's like, yeah, there might be some different technical characteristics on other time frames, but they're analyzed in the same way, And it's not like what happens on the daily can't happen on the 1 minute or vice versa. It's of course it can. And the more that you understand the 1 minute, the more likely you are to find things on the daily that you find familiar. But people that only trade in the long term may only have made 10 trades in their entire life. And that is not how you develop, in my opinion. But understanding the moves, like on the short term, they can provide you candlestick patterns, chart patterns. They can provide you with how to understand an indication, like why, like 100 times over. So you've already got so much more experience than the long-term trader has because you've spent so much time looking at these different environments, different patterns, and understanding them and understanding the results of them. So when they happen in the long term, you can see how many different things in that pattern have went wrong in the past, and are any of them relevant on the daily. Or you could just, that's just one way to think about it. And I'm like, well, it's power, because a lot of people are sitting there, oh, how do I take the risk on this? How do I there's a big maybe in here, and it's a giant field of gray area of not understanding. And they try to find themselves in, like, they try to find a way into the stock or position, and then they start to become emotional about it because the first thing that they do is start looking at the profit and loss, because that's the most human thing to do, and it's the most counterproductive thing to do as well, because the individual's profit and loss is no indication of exactly where the market is going to move, or it's never going to tell you anything other than how much the stock or your position is affecting your livelihood. And that makes people emotional. So then when they become emotional, they become irrational. and then they make decisions based off of this. And I'm like, this is seemingly like, how we can go out in nature and we can find animals doing the same thing over and over again? I'm like, the human is very, very, very similar in the sense that they have the same pathway with trading, and to eliminate the emotion with understanding, is the name of the game. Now, this is exactly why I said to make sure that you made it safe if you took that pop, because usually that pop comes right back. It's like a smaller version of the bigger triangle, or bigger move that we had in the morning here. The idea that we did this one and then we consolidated, and then we did another one here, and then what did we do here? Very similarly. And it is true that the right shoulder and the left shoulder, met the same level, and we're here now with this. And the pattern itself has, I would say, effectively formed. Now its play out is the elephant in the room, because there's probably, I would say, 70% chance that it gives them trouble and ends up interested in the stupid 61 up there instead. I mean, like, where's the 61 today? Have we even seen one? The one that we just came up off of looks like a 50. I mean, the 61's getting neglected. After yesterday, I'm like, how many 61s did we see yesterday? 25, maybe more? I don't even know. A lot. Too many. Yeah. And today it's like non-existent. Like, I find that the institutions, it's like they set it up as though the individual looks back at the previous day and they see what's worked at the most effective spots, and then they try it the next day and it does not work at all, not even close. And the average person is going to be looking for things that are familiar. They're going to look for something and they're going to try and play it out because they found that it worked yesterday, and it will do the exact opposite thing the next day. Not always, but it has been doing that very, very frequently. And it's like the thing that was the most effective for the last day becomes the least effective for the next. And that's 2023 for you. Didn't used to work like that back in the day. For decades and decades and decades, we could expect the market to not be like this, and and then it all changed, and I think it changed with Robinhood, but it probably changed with a more significant event. But around that Robinhood time, the meme stocks where you'd find people, watch this guy lose $200,000 in a second. Look at his face while he does this. And stock trading porn became a thing, and because people get off on it, and it's like that's I'm disgusted by it, by the way, but it is the case, and the market didn't respect that. I could see, treated everybody different ever since. The cheat sheet never worked the same. But it doesn't mean that that's a disadvantage for those that understand that. It means it's an advantage, if anything, because it's not like the patterns have been failing on us. The patterns have been expected to fail appropriately, and they fail accordingly. So. And it's like I've come to realize the failing patterns are patterns themselves, and they can be predicted just as easily as the ones that don't fail. That's the interesting part about it. While the individual thinks, "Oh, the patterns are failing," they feel negative about that, and then they think that that's going to be a problem for them, but it's not. If they think about it very clearly and focus on those patterns and actually figure out where you can fit yourself in to those failing patterns, and whether or not those patterns failing are like progressive towards your long-term agenda. Like sometimes you'll have a long-term core position, and those patterns failing will progress your long-term trade, and you will learn that they're part of that trade, part of that movement, part of the way the market moves nowadays. And it's like I didn't necessarily want it to change either, but the thing is these changes came with more volatility. It's like they made these patterns fail, but they did it in a way that was harsher than any other failure from before. Like they really like pushed it hard, and now it's like we went through phases where there was like, okay, we would come through it and there would be an entire month of head and shoulders that were just like, it would be somewhere along the lines of 80% of them would fail. And that was after we got out of a month of falling wedges spiking out of the bottom. Like 80% of them would spike out of the bottom. And it was like for a whole month or two even that we would go through a head and shoulders phase and then a falling wedge phase, and now it can't pick which one it wants to do. It fails them both all the time regularly. Now we've even seen rising wedges failing upwards when we're high. Because we have to think, a lot of people, when they come into the market and they see a big rip up, they're going to try and short it. And I think that that's become part of dealing with the people in the morning. And that's fine, because we understand that it's playing with fire when we're trading in these little ranges with all of the people in the morning. And it gets considerably clearer, and the moves provide a lot more profit towards the end of the day. Typically, it's not always going to be like that, but as soon as the individuals start flocking in at the end of the day, we'll never see an end of day move again. That's just the way it is. As soon as they start to notice that the end of day has become more profitable than the beginning, there will be a switch, and the market will accommodate for those people that try to switch. But for now, it's good to be ahead of the game and to understand that we can find the changes as they happen, and anticipate some of them, and that's important.
Yeah, there was like an 88% retracement on that move before it went up short term.
Yeah, it's heavy duty, and it's like that. Even to me, it's like, how much we've seen three drives pattern happen. I'm like, what happened? So many people will be waiting for the three drives, and it just didn't happen. But what I can see is very, very strange, actually. The idea that we've been doing expanding wedges, except it's not expanding. It's like an illusion, because it kind of looks like it would be. It was down here. Sorry. Sorry, coughing my lungs out.
They were all like three drives, pretty much.
Except for the last one. But I mean, if you were in from the last,
like just forming a bunch of head and shoulders.
yeah. Except for if you were in from the last three drives pattern, this one may not have knocked you out. Yeah. And the audacity to form like a head and shoulders, play it out, fail it. It's not very nice, is it? It's like, well, what's this pattern right here? And do we find any similarities to what just happened in there? Like a little sneak peek preview of what we could be in for with this one. However, the dump is questionable. Is it even going to do that? After we've seen that its end result ends up here, are they even interested in doing that if it's just going to make it, back up anyways?
The 188, 200 short term.
Like the bottom one?
Yeah.
Interesting.
Yeah, short term, yeah.
Mm-hmm. Yeah, the 61's starting to speak to me now up here. But I mean, we've done 4 highs, 4 lows. Well, you could say even more, but really 4. You notice that. And I mean, the people that have been associated with this head and shoulders for it to go down, they're all either buyers or losers at this point, which is tough. And the head and shoulders failing been pretty common at this time of day, of course. And I'm like, I don't even see any volume here either. Like this is okay. One thing about it, there is a blue line there. Now, I remember talking about it earlier and saying that next time we run at it, it could actually feel it a little bit more than the last time. And I'm like, well, if we hit that blue line, that would be perfect to come back to the 61. So just keep that in mind, okay? Coming back to the 61 is a little bit better than the 61 coming down itself. The 61, returning to it is one thing, but actually holding it, oh, that's another thing. I didn't say it was going to hold, I said I was going to get to it. So, at the end of the day, beware of that 61 from the upper side now, off the blue line that it seems to be, with precision, responding to. It's disgustingly precise. I love it. We'll see more of it too, and it's not like it's not going to get above it, it will, but the 61 is likely to be part of the mix. I'll mark it. So it stands out. Why it's so precise. This blue line, we see it guaranteed. There's no way that we do anything until see that line. So it means don't drag your stop above it. Not necessarily an amazing hedge or anything, but if you did take the hedge, then that's absolutely fine. You want to make sure you have orders on the 61 or even a little bit higher just to make sure that you're safe. Another thing I've noticed as well is we've been capable of taking the entire consolidation. Even let's say we hit the blue line now, it could make this consolidation away. And of course, like the red zone is something I'm really considering today as well, because it is just related to the green zone. And clearly the way that they made it move, it was on a squeeze. Like I said, where are the people going to put their stops? And you can see that when we jolted through that high right there was a pretty large increase in volume. I mean, the volume was pretty steady through the whole thing, but everyone that was essentially short for the head and shoulders was stopped out. And I mean, anybody that was trying to play the failure had to really persist with it and go against, one of Google's most popular patterns to be profitable on this trade.
The VWAP has been huge too, I think. Giving you a baseline to look at.
Oh yeah. Huge fan of the VWAP. Yep, you got that one there too.
Yeah.
Yeah, you can see we're crushing these levels. I mean, it's just absolutely perfect. I can't get enough of it. Take a picture of it. So, just to put it out there today, and it's like, yeah, the slow consolidation, it will eliminate many of the people just because it's slow. A lot of people, they can't take the slow because they just see it like this and they don't know when it's going to end because it's just trading into an abyss. It doesn't ever say that it's going to end. They think that it'll be a range day. They've just been presented with this kind of movement too, so it's very much like everybody will think that it's going to do what it did the last day. Always, they see big movement, all the people flock in the next day and it goes slow for them. And because it's slow, they think it's going to do it the next day, so they stay away, and it's fast. Literally, I've seen it a million times, even in the professional world. And it's like it takes discipline, in my opinion. Understand that it's all relevant, even the slow times. And you can have an understanding at all times, and when you don't, then it really becomes a curiosity, and you start to learn. You start to develop an understanding. You don't just remain like clueless, and people are okay to remain clueless and act on it. I'm like, I'm not at all. I'm like, you don't deserve that. Nobody deserves that. And it's like if somebody else was holding you accountable, they really push you into it and think, they really tell you, they're like, hey, you know, what are you doing? Explain yourself. And I mean, it helps, man. It actually helps when somebody does that. You hate it. I hated it for years, man. I hated it for years. And it's like somebody's going to talk to you when you've done something wrong, And it's like, it's when you've done something yourself and you're holding yourself accountable. It's like it's easy just to like say, oh, I want to go have a drink because of this, or I want to go and do something because of this, or I don't know. And I believe me, I used to be the guy literally in on Bay Street with a bottle of freaking Oban in my suit, in my overcoat, and I would just like literally be getting onto the subway and I would pull it out and drink it right after I was done. And I was like, yeah, that's literally what I did when I was back in the training floor for part of it. And it was tough on me, especially when I was just having my newborn and stuff like that. But I had to chill out on it for a bit. It's too stressful for the first year there. But regardless, it's like now I don't have any kind of like, oh, I have to go and do this. It's like I've eliminated all of that stuff, and I see like I caught it like it was a cold from the public. Like it was like all of the reasons that they had to stop trading, all of the reasons that they had to stop understanding, all of the comfortability that they had on acting with no understanding. And how many times people could say, the famous, F it, I'll do this, or let's see what happens, like essentially just saying screw it. And that means at the moment that those come out of your mouth, you've lost all control, in my opinion. I see that very, very clearly now. So it's not part of my vocabulary anymore. But it used to be, because like as I say, nobody's born understanding exactly what's going on. You have to learn, and you either do that through experience, which is the hard way, or you can be taught through other people's experiences, so you don't have to learn the hard way and experience it yourself. And I mean, that's like a lot of other things too. You just learn the process of, like I saw, on that there was like a podcast or something, and the guy was talking about how, when you learn how to do something successfully, you can take those skills and those attributes and those like those uh those methods that you use to complete that process successfully, and that attitude and everything, and you can bring that over into the next task and next, use those tools that you've used to become successful in that first aspect, or first uh what would it be called, first like event that you found yourself successful at. You could take those same kind of um attributes and bring them over to the next thing that you're doing in rudimentary form. And he explained it far better, but I was like, yeah, no, that really made sense to me. And I was like, well, I can see that a lot of the logic through keeping yourself out of danger is very similar to the logic that you would use if you're camping. It just makes sense. And the same physics that we use to understand that when we run into a barrier, we can see the value of it responding after a move this much for needing relief so particularly on the blue line. Don't you find it very, very particular that it hit the blue and blue twice and then came down just to hit the other blue line twice? And it's not always going to move like this. Next month, I may never expect it to hit this line. So it's like a matter of the phases, and people, they like to learn in a way that's like, I'm going to do this all the time. But the market doesn't respect that. It really just doesn't respect that. It doesn't respect one mindedness, like I'm going to do this one strategy all the time and expect the same results, because the market will provide you that strategy and it will fail. Bring me a strategy and I'll find it failing anytime. You could bring me a strategy and I will find you a spot that it will fail. And it's like, can you survive that, and can you manage yourself when you understand that it's going to fail? Or like, what are you going to do? Some people allow it to fail while they have the position, and it's like it's like that would be something you'd have to work on, right? So I mean, like, and some people, they know that they have to work on things and they still don't. Like a lot of people, like smoking, for instance, they want to quit, but they only have themselves telling them to. Other people might have 10 people telling you to quit, and they might actually quit. But it depends, motivations and so on. And it's the same with trading, I find. So, and what's funny is when you get through those things that otherwise sound difficult, like they become accomplishments. Like it's not a bad thing. Like it's like, if you have an issue, it's not good to just feel bad about that issue, but to understand that when you get through that and overcome it, you will have an accomplishment to feel good about, and to, you can even use the information that you used to benefit other people in the future. And that becomes a whole other ball game, of a good thing you can do. So essentially, that logic is relatively the same. And why I even say this is because I find that it's important to understand it so that it doesn't become questionable in a critical time. Because when emotions are flying, if you don't have clear logic to rely on, the emotions may get the best of you, and that's just tragic if there is logic that could be understood and followed. So like, and that's like in retrospect, you might even know that, like that about a certain situation, where it's like you can see that you've clearly made a mistake in the past, and that you want to change yourself so that you don't fall for that mistake again. But it takes effort, and you have to actually like put time uh, into it, like into thinking about changing, into actually, seeing what you have to do differently, into, changing your actions, changing your habits in some cases as well. End of the day, we just broke the yellow line. That was pretty steep. Basically, we could be in for a right shoulder like move here. I'm very curious about that. I can see on the bottom that we did leave some untested B points, and pretty much all of the highs in here, like this one, I don't really consider it tested, or this one. So what that means is they're not necessarily amazing targets to go for, because it is in the middle of the range right now, but when we get to the red zone, they become very attractive, and also they're markers to show you that if you drag your long trade stops up into this area, they're very likely to just take your position from you, and that's rough. And it basically means that at any given time, while we're in this range, so long as those green levels have not been hit, they are subject to getting hit on any trend break. So that's the risk of continuing to hold. Like if you were long above those levels, it is a serious consideration to protect with a stop and profit. To keep an active management. Not to say that anybody should be long above those levels, but if you are, you definitely want to be careful. Because you're basically buying into the construction of a bearish pattern. Like a W involves upwards movement, a rising wedge involves upwards movement, and they all come down from their highest point in the patterns. So bearish patterns involve it going up, and bullish patterns involve it going down, which is contrary to popular belief. Ironically, when people see big down days, they can't help but say that it's bearish. And when people hear that, they continuously think that their opinion is that it will go down, which is really friggin' funny to me because, you know, all bullish patterns that are most effective, end with a downtrend breaking upwards. So the existing trend is down and it goes up as a result of it changing. It's not up already and then it goes higher. That means there already has been a better price to consider and you haven't even considered it. And I'm like, well, why? And next time, how can we be more favorable towards the area that was better rather than being late into the trade and being part of the next retracement? So it's like, or being above the B points. I'm just like, it's just unsafe to be positioned from those levels. So, kind of interesting. And right now, we've got like a Head and Shoulders that's, waving at the head there. It's definitely not making the people of the Head and Shoulders very comfortable, I'll tell you that right now. At the end of the day, this pattern right here, it threw it out there. And it was like, hey, everybody, learn this pattern. And then it did anything but that again. Almost the exact same pattern. Almost the exact same moves. Almost the exact same time. What's wrong with this? It's even higher. You'd think it'd be even better. Yet, only trouble for the people associated with it so far. And what we've been seeing lately is an incredible amount of leading on. This one is it's very, very intriguing to me because you know how they've been made the most effective Head and Shoulders? it has been with the right shoulder in between the left and the head. And that's what we're doing right now. Except fear is fast. And I don't see any fast here. Which is suspect of it being, more interested in breaking this line. I'm like, the audacity to break that line in a bearish pattern extended at the high of the range, right? The audacity to be interested in that. It's kind of rough, eh? So it'll be contrary to popular belief that such a high trend could break when it is so high in the range. Who's going to be responsible for buying so high and propelling it further higher? Well, the average person with their pattern and their head and shoulders, they're likely to have gotten into this slow area and they're likely to get attacked right now. It's brutal. And it's not because I ain't been there before. I've been there. Now I do the attacking. Instead of become the person getting stopped out. The Google pattern failing. Because I can find this pattern on Google probably 1,000 times doing the exact opposite thing that it's doing right now. And I call this line the audacity line, like I mentioned. Because it has the audacity to break this line over this one. Over the big, bad, juicy trend. Why would it do that? These people. And it's not like it's not going to come down. It's going to come down. It's just not with these people. So that's the tough part. It's really tough. And you want to know what's funny? Is it will likely make them right after this. Because you know what? A lot of people, this is going to become a point for them where they're like, I guess you could say trapped. So it's right now it's giving them a minute to try and move their stop higher so they can be even more fuel for the upwards push. But now anybody that was associated with the head and shoulders that seemingly worked well before never was able to profit. Coming back to, I call it taunt them, because it's pretty rude to come back to their average price now. It's very likely to do that though, and it's like a psychology thing. It really, I can see it would be a very, very tough time. See, here it is. Oh, you were about to be right, and see them get they'll get their position back at the same level because they think they're missing it now. They just get stopped out again. I'm like, geez, it is rough on them. Let's see what happens. At the end of the day, it's not an area where the best traders in the world are trading and making big bank right now. I'll tell you that right now. It's where it's trying to screw certain people that are following a very small pattern, trying to get something out of it, and they're just getting inched out. What's up?
Spike to the 188 there to that.
Very small?
That you got down there.
Oh, this one here, yeah.
Yeah.
That's also another level that's like, it's becoming, it's like it's having its month, like the 188's been like hit or miss for, it's as much as a head and shoulders could be now almost. So I'm like, do we get like, I mean, we've been seeing a lot of the 241 lately, and like that means getting on top of the 200 and 188 as well, and I'm very skeptical if you can't tell at these levels. I think it's very dangerous to be the party that's clearly getting their feet stepped on. That's what it's like right now. And they're not pushing so hard into it. Like they're doing it right though. Whoever's controlling it now is doing it right. They're putting most of the people in to a short position into a bearish pattern and then stopping them out to advance their already accumulated long trade off of the low because they don't want to have to pay for the little bit back to the red zone there. They don't want to have to pay for that. They want everyone else to push their position that they accumulated down here up to this level. And they don't want to have to buy more to get it there because they also get in trouble for market manipulation if they were to buy up here on top of such a big position. It's like, what are you doing? Pushing your position even higher there with all those shares. No, 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 no. Illegal. So it's like, they better not be adding so much that it's moving the market. But if they convince the ordinary person to get stopped out and advance their already existing positions, that's the best way to get to the red zone. And I want to take a look at the other chart. Because, we've used this area before. You know, we have the first of the three highs to consider as well. It's definitely a third drive. And I can see that it started from a low, so it went 1, 2, 3, which is the largest, and then had this kind of move after. Oh, you know what? I'll type it in here. Special type of motive wave, which appears as a subdivision of wave 5 in an impulse or subdivision of wave C in a zigzag. And I mean, an impulse is the one that we're looking at here. 1, 2, 3, 4, and 5. And essentially, in figure A is what we're looking at. Basically, the same thing here. 1, 2, 3, 4, and then it does this weird like third drive at the end. I'm like, what is that? This. And it looks like when I just drag this over here, how many waves is it making? Gee, you know, how many times does it do this? Now, like I said, there's a first of the three highs. I find it ironic that that's actually the 61 as well from my mental measuring tape. Let's take a look. Yeah, it's 61 right there. And then oh, well, that's interesting. We make it transparent. Anyways, we're at that 61. Ending diagonal is usually characterized by overlapping wave 1 and 4, also by the wedge shape. However, overlap between 1 and 4 is not a condition. It may or may not happen. That's interesting. Forgot about that. 1 and 4? You want to know what that looks like? That's ridiculous. It doesn't even look like the picture that they have. 1, 2, 3, 4 overlaps 1. That's what it can look like. That's acceptable in that weird pattern that we just saw here. I mean, it did a good job at taking it from red zone to green zone, I'll tell you that right now. And we did that yesterday. Could we do this again? Like, totally we could do that again. That's what we did when we were here. We might be interested, maybe not the same way, but you know what this brings over? Is it brings over 3 angles. 2 of them are really important. And I'm gonna leave it over here just to see if it pops in, just as like a template that I might be interested in. It's not quite triangular yet by any means. But yeah, this is the ending diagonal, if you've never seen one before. Here, I'll actually pop the picture in again. And post a picture of it so you can like look at it. I'm like, where's the 61 to the big move up, eh? If we're, here, I'll post a picture. That's pretty cool because it's an advanced pattern. I mean, you don't just stumble upon this pattern really. It's very particular, and I think that they almost overcomplicate it. And this is a slide from one of my videos, so it's like, you know, at the end of the day, I think you get a better experience just seeing how it worked out. Honestly, yeah, that could be maybe even added into it, but I'll see. I'll post that picture, and I'm gonna reference. Wow, this is what I was looking at before. The daily. Five-wave move into 3 drives. You know, we were even coming back to the 61 then. That was 2020. Yeah, now our 61, we do the same thing here. We come back to test it from the underside. Wow, that's actually an old 61 as well. So the last time that we were here, it was a 61. That's what's strange about that level. And it's yesterday's 61 too. Oh, take a look here. Yeah. So basically, the trend broke from yesterday. Never really got to that 61. I marked that 61. And that's the 61 we're working at right now. Coming back to test it from the underside, like I said, something to consider. But yeah, that's a really interesting move. Now we're left with B points up here. But yeah, that 61, we'll put it back on there, even though it is the gold line. We had some respectable fibs from up here too. The 188, that first one. Second one, yeah, it's basically there as well. There's the 61. Anybody that traded back to the 61, your order should be filled. But not to say that that's an amazing trade, it's just basically like that one from before. Small 10 pointer. Of course, it could lead into a bigger trade, but it's more likely to have a secondary low before actually doing that. The 188-200 had its first positive response. Ironically, making another 61 would get the B points. I look at that. I'm like, well, an interesting level right there. Yeah, interesting. That secondary low is actually it's actually looking like it's not as strong. It's egging on for that secondary low, but it's fighting very strongly against actually making it. Which is intriguing to me. See, it's, every part of that node is getting used. Like they've recognized every single part of it, ran into it, like it needed to be, stood at for a second or held for a second, needed to be acknowledged, you could say. It's made a 61 on the short term, a little bit more now. Curious about that. But the secondary low, what it offers us is a opportunity to draw a trend. And as insignificant as it may seem, there actually is another one here, which could be marked as blue. Falling wedge environment for now. And lately, I mean, we've seen that it came from 3 drives. It could make an entirely third drive again, and what that would be is 1, 2, and 3 into 1, 2, and 3. It's one way to make an expanding wedge, ironically. And that's very similar to this. I mean, and it's possible that we could do this. But what we came out of was this. That's what we did first. And then we went to this. And in my experience, what we do next, after this, is this. But what I might find is that it's interested in a third drive off of it and forms a rising wedge in reverse. So as particular as that is, I'll be watching for it. And it's just another method of consolidation, really, because it's not really going to have to do it in an area that's too far away. And it's like I've never seen it do the 3 drives into inverse, and it's something people will be looking to do something that it's already done, and I find it unlikely to continue spamming the thing to make it easy for them, but rather change it slightly so that it's difficult for those that are trying to implement the thing that worked well last time. That is very common nowadays. So to understand the need for something to happen originally is what the market wants, and I think that as we see this form, we will see that there are changes that can otherwise seem necessary before they ever happen. But you know, the way that I see this is regardless of if it does 3 highs or 3 lows or an inverse as the low, what its goal is to change up how it does this. Just another way to get back to here. This one is the one that we have right now. This is the one that we have been doing very, very, very frequently. And what I've noticed on other days of consolidation where the institutions have kept complete control is it starts with this, goes into this, ends in this. An inverse head and shoulders to a head and shoulders, all in one. Where it starts stuck together at the same level for the people in the morning, it moves a little bit more for the people in the midday, and this is for the people that have survived the slow. And it's like that's literally how it is. People that survive the slow get this movement. And it's every day that it would seem to be like that. You can see it in the ATR. Every time, well, today's ATR actually looks freaking weird, but usually, I mean, we come down, we coast down, and all of the people get just dissipated in that movement. They think that it's, never going to move again. Then by the end of the day, those are the positions that seem to hold into the next day and potentially give you longevity on your trade, and it takes patience to get to that point. And every day we can see that from that low point, it increases in volatility to the towards the end. And I mean, it's not always going to do that, but I mean, I'll be damned if I don't consider it, right? Because it does it so freaking often. So I'm like, if it does it that often, you know, we can understand that there's different phases of the day that have higher volatility than others. The open being the highest volatility point uh, of the day typically, and from 11 o'clock being the lowest point of volatility typically. Almost at a 241, third consecutive low. Means that we can readjust the trend. And I do question the opposite pattern from before. Let's take a look at it. We're just past the 241, almost 261. 241's been making itself known lately. We're basically at the lowest point of the consolidation from earlier. A little bit of volume past this point, but it's only because of that spike, and that's not very much at all. Basically, they've come back on a 261 to anybody that had a position in the consolidation. But you want to know what I find interesting? Is as they pass this low, like they triggered many stops. They didn't have much volume. which is abnormal because typically there would be people holding that would get stopped out from the bottom, but not this time. Of course, that red zone belongs to another green zone that's very, very, very similar to the one that we have at the top. And in fact, it is exactly the same. It was used more than the first one. And this level right here, it happens to be the next fib set that we're running into. Trend's breaking off the 261. Very common fib.
Coming off a 188 short term too.
Interesting. Just like at the high, it puts a lot of emphasis on the first of the three. So like we had the first of the three up here. We have here now, market blue. What I find interesting about that as well is that it continued its expanding nature, but not equally. We didn't see the last expansion equally out of the bottom. And you know that the consolidation that we had in here was pretty good about making the spikes at the top similar to the ones that we had out of the bottom. Until it was over. Something along the lines of this, though, like I said, is common to have happen next. Because when we start a day, we have the two patterns squished together, or going along the same level at a 8 times it hits the same level at the least. Then we go into this, where we do the controversial head and shoulders or 3 drives pattern into the controversial 3 drives pattern or head and shoulders. And then we end up basically using that as the S wave, the method to get back to the equilibrium. The reversal at the high, the reversal at the low, the middle becoming more attractive like it was in the first pattern. And it's not like the next one doesn't see a lot of the middle as well. But in this case, I could expect this pattern to actually send it upwards by the end of it. We see this pattern formulate. Not sure to its exact size, but looking for that construction of trends to be following the same path as this schematic. And it could be the end of this consolidation, because ever since we started this, we were doing it in here, like a major inverse head and shoulders to head and shoulders, all across the same level. And what's funny about that is that the head and shoulders that it ended on failed upwards. And the head and shoulders that this one ends on is also likely to do the same thing. But it's also likely to break the barriers of the entire consolidation. I want these to become B points in the future. It actually gives me deja vu to this chart over here. When we hit on the 5-minute. This level twice. A red zone and a red zone, right? First time we hit the red zone, it came off hard. Second time we hit the red zone, it came off hard again. But it carried on to come off even harder. Just to make those two tests into a B point in the future. So remember that when we look at this 1 minute, and we can see that there's two tests of equal size on a red zone, and then it comes off just to make these two tests into B points in the future, I think. Of course, anybody from any of the previous trades, if you're still holding, you don't have to figure out where it goes up any day, no matter how hard it is, because you're still in. That's the power. And it's like when we take a position from a long-term low, like a daily, and it comes up to the high, and you work on finding that hedge. You work on finding that hedge every single day, and then when it finally comes down and you're trading in here, any of the lows and highs on that account don't need to be caught because you actually have them. You've got the low from here and the high from here. Anything that happens in this consolidation isn't for you because you only trade at the best price. That's the idea. And anything that happens contained within that hedge is going to be subject to becoming a profit while you're waiting for your long-term trade to flourish. So I just can't help but notice that the 188 has been getting, a lot of flack lately. Like I mentioned, it's kind of reminded me of how the Head and Shoulders bit the dust a few months ago. And, it just basically never recovered to its original state again, where it was, trustworthy and reliable to reverse trends on a regular basis. Not in 2023 though. Not for the Nasdaq. Maybe for individual stocks, but Nasdaq on the whole, it has been making a lot of three drives patterns lately. And I'll tell you one thing, how do you make a three drives pattern without getting through this point to go up here? What can we do to ever make the third drive? 3 consecutive highs, 1, 2, and 3, if we can't fail a Head and Shoulders. Now sometimes it looks like this. And it never really made a Head and Shoulders at all because it didn't come down to here. And that's allowed, of course. But it's more common for it to actually make the Head and Shoulders and get people to short it, because what happens when we do that? Well, they short it here, right? That means their stop is going to be here. That means that if we just nudge it just a little bit, they become buyers at the very worst price, at the very top. So if we get 100 people to do that, it might push the price higher. If you've already been buying down here, this is a great thing for you. A great thing. And I mean, it's not good for the people that it's happening against. Now I want to talk about this giant gap here too. The B points, they're on the other side of the gap, but we just responded to the gap for the first time. And, it does have this movement here. Could we make an inverse Head and Shoulders? Did we already make an inverse Head and Shoulders? Because we had that move. Is this an inverse Head and Shoulders? I mean, it's like it technically did make a low with a lower low and a higher low, and it went up after. So I mean, like, I can't really bash it too much, but at the end of the day, it looks funny. But it worked. And the irony is a funny looking inverse Head and Shoulders had to fail in order to get us to this point. Right after we saw that same kind of funny looking Head and Shoulders fail to come down. And it's like, what are we left with? If not, in retrospect, 1, 2, and 3 highs. And if it's part of an ending diagonal, you can see the power that it can generate. And honestly, it's all going to get bought up by the end of it anyway, so. But there's a report tomorrow, and keeping it centralized within a range for time being is absolutely fine. I think that they're going to buy it up so that they can get their hedge position and then bring it back to the middle so that there's indecision for the report. Yet they don't know that they've accumulated a hedge position. The average person isn't thinking that the best player is going to be long and short. Like it's going to go right over their head, like almost guaranteed. They're definitely not going to be thinking about going long and short at the same time. They're going to be thinking about being one directional, and if it doesn't go their direction, they lose money. Now the institutions will be set up so that if it goes up, their assets will make money, their hedges will get stopped out, but if they're already at a profit, well, that's just a little bit money instead of a lot more money. And their assets make more money, with the risk of it going down being averted because they've got the hedge. So does it matter for them what direction it goes if they play it right today? If they can capture a hedge today for the assets tomorrow, for the move tomorrow, are they not safe? You know, how could there be a risk? That becomes the next question. So yeah, you can see why running into that gap, it can run into it like it's feeling it, and it made another right shoulder again. So it's like it doesn't matter if the last one played out or not. Is it a fact that we have a low with a lower low and a higher low? Is it not true that we've made the same pattern again? This one can be disregarded as it's already played out, and we have a new setup, which is ironically even clearer than the last one. And I'm more skeptical of its playout, ironically. I think that the people of the last one could be safe, but the people of this one it might give a little bit of trouble to first, which is fine. Ultimately, like I said, it'll all get bought up anyways. But the people might have to go through a little bit of difficulty, as per usual. I actually see it going like this. Basically, we have a medium bar here, which it seems to be using now, but the clearer the pattern, the more that it waits around, the longer that it lingers for everyone just to take a position. I don't like it. It's tougher on them. And when it's tough to catch, it's usually easier for those that caught it. If it's easy to catch, then it's usually tough for those trying to get out of the range. But you know, the best prices it doesn't usually linger around for very long. It doesn't offer much volume or liquidity at those prices either. So it's great for individuals. Hard for institutions to really accumulate off of the public if, you know, barely any people are trading at the best prices ever. They all like to trade in the middle. And that, you know, the volume's proof of it, you know, because yeah, we might not see the institutional volume, but we see the individual volume. And the individuals definitely like to clump together in the middle. But the areas that it doesn't stay for very long, the areas that offer the most profit for those exposed to them, they're often quite quick, and the fares seem to be dried up really quickly. And although the yellow line is a downtrend line, I don't think we're really out of the woods until we get through this one. And it's very likely that they do some sort of fake out first, because, you know, having all the people trade at this one level, this is the very, very, very highest point that they've gotten most of the people to trade. It'll usually stop everyone out here. Usually. Not that easy. But it'll usually give them their target right after it stopped them out, which is interesting for me to see, because you can see that the general public will be positioned off of the cheat sheet on Google most of the time, and you can see that their volume is literally proof of it, and it doesn't change. You know, the public definitely doesn't learn when they get stopped out. They seem to find new people to fall for the same tricks. Because it's like a here we go again kind of thing, right? Like I find myself feeling like I could say here we go again. So all of that slow time that it just allowed everyone to accumulate a long position, they all feel fear now. That's the irony. It's at the 61. They're just trying to get a few more people. But what's ironic about making these diagonal channels is it can remain in the middle of them as it's coasting down, and that middle line can still threaten the entire break of the downtrend regardless from where it bounces off of. Its duty is to be interested in this line, but it's not to be interested with the people from this consolidation. That's one thing that's really obvious. They like to make sure that it's difficult for these people, if anything. As they're comfortable with trading at a spot that's not the best price, right? At least it'll make it seem like that by the end of it. And the pattern that it's failed the most, it's likely to actually go up on, ironically. 2023. This. And the way that I would usually mark it up is we would have this level here to consider for the break of the entire red-yellow line when it does decide to break, because that line can never be considered and never be positioned for until we're aware of the red-yellow line, or well, in this case, the red dash line. A lot, a lot of people they will find this inverse head and shoulders to be off-putting because of the fact that it looks larger on one side. I actually like it a little bit more, funny enough. The right shoulder is in between the left and the head. And I also question whether or not it's interested in doing a Wyckoff, because we have a very similar movement to this. So far, this little area could be viewed as the existing preliminary support, and then we basically came back to test. Consolidation is definitely coming to an end from what I can see. I think that they'll be relatively chaser free up until that arrow. But every single time that we get to where I have that arrow, the public seems to FOMO so heavily. And then that means that any blast beyond that arrow is subject to coming back to it. Of course, it will be the B point as well, very close to it. trying to find that thread the needle moment. The break of the yellow line, if it can lead into the break of the imbalance. But people have to find that perfect spot. Pretty dead before it usually, because it's a deterrent when it's dead.
In the 1 minute RSI still riding underneath the 15.
Take a look here. Oh yeah. So I do think that I'm gonna make an attempt at trying to get through it. By the time we're at that line, we should be trying to make it through it. The 15-minute, it's pretty centralized too, so it's got a lot of wiggle room in this area to really, snap around. Take a look at the longer term. It's still pretty centralized on both regards, but the orange one could come back up to test the blue one on the hourly. 15-minute itself is, even the 15-minute MACD is not really showing much. Got no divergence whatsoever. The 1 minute does though. The 1 minute has a slight divergence across the board, with momentum having built throughout this time that it has been slumping, and momentum throughout this time having been built while it was slumping. So in other words, it says the consolidation is having an impact on its ability to go down. And like I said, I think it's going to be this middle bar. It's just very difficult for people to get exposure to that middle bar. That's why I say it's so much easier to be in from a different day than it is to try and capture a position in the middle at the 50 on the daily. But it is also an appropriate place to have the report tomorrow. If the report is a really big deal, think about where they've got it. Right in the middle of the entire area. If it pops up, they can add selling. If it pops down, they can add buying. But, a big move to either side of the range. More than satisfactory for the average individual. And by the time that it's moved to one side of the range, it's likely that the individual has lost their capability to work together. And like statistically, I would come to understand it. Like they will know when they release news articles from the companies that they own. Basically, they've come to understand how the public responds to these articles and exactly how to word them so that they think and believe and feel a certain way about the environment. While the people actually think that they're getting news that counts. But if everybody's news mattered so well, everybody would be doing so much better. That's all I have to say. All I have to say. But if the news mattered so much, then why isn't it helping more people? And the news that we're given may not be always the right mindset to have as well, because like sometimes it's very opinionative. Like that article that I found the other day when I opened TradingView, I was like, man, they were like trying to make you believe them almost, and I'm like, oh, that's crazy. I don't like that. I'm very like, cynical when it comes to opinions. Like unless I see facts that lead to mathematical conclusions that I can, see the market has an accurate and, respect for, I don't, I'm not interested in it. And I got all the patience to watch it play out 5 times, because if it ain't gonna play out 5 times, then God forbid I took one, because it didn't work, did it? So I'm like, geez, we can really think about all these things, and I'm like, I encourage everyone, like if it takes you a week, 2 weeks, 3 weeks, doesn't matter how long it takes, as long as you're doing it right, the right way, and you understand it the right way, because you owe it to yourself, right? You don't lose money because you didn't take the time to understand. And it's like because it's super counterproductive at that point. As we can see, we're running into this level. This is a really important level, actually. You know, this is the level that caused this consolidation, that caused this dump. We're using it right now as a support. That's why I dragged it over here. The only bar. And basically, this entire consolidation has been sitting on top of that. We respected it from the underside, and then we respected it from the overside. We did a giant S-wave on it. Now we're here again. I'm questioning whether or not we actually have this in reverse. That would make, if we're making a head right now, we would actually have, this is the left shoulder, but if we played out into a right shoulder, it could be the high with a higher high and a lower high, while we have a low with a lower low and a higher low. Thing to really consider, because breaking the trend and then retesting it would make a right shoulder for this head, and it would make a right shoulder for this head as well. Also, one thing that we haven't really seen too much of is the 261 get tested from the other underside. It did happen a couple times and then once here, but more predominantly perhaps to make an S-wave around it. Similar to how we did before. What's interesting about this move too is, like, if we look at the daily with nothing on it, this is where we are. We've done this candle right here. You know, for the past few days, from the first day, it managed to make a pullback and then another major pullback. But since we were interested in coming back to this major low right here, there has been really not a day since that trend break that the previous day and its long from the low did not hold into the next. Today, it's subject to coming back over yesterday's trade. But yesterday's trade, you know, it was high. If you did go long at any time from yesterday's movement, that upwards push to get the remaining chunk to that B point, it's literally like they were going from here to try and test that last little B point area in there. Just that last little bit that it didn't manage to make that first day. If I go back to the, or sorry, in here. The hourly is what I usually look at it on. So we essentially came in to test this low, and we managed to push to this just about to that level. And yesterday, we managed to get through it. And it's basically, this is the response to the B point up here. And with a report coming tomorrow, it being at the 50% retracement, just hit the B point. If it was the 1 minute, I would never trade here. This whole day, just not essentially an area that's going to offer the best trade. You know, the best trade to be in would be the one from that had the aspirations of getting to the up thrust on the daily, which is this this idea right here. And if you have exposure to that, I mean, you're well up into this range now. And you've cleared that target. You know, the only green dashed line on that chart. the red yellow line was to break to get us to that level. No better way to have done it, but to be in still from down here. And to try and give it up and fight it back for the middle is harder. And I just I find myself explaining that quite frequently because I think it's human to give it up. It's hard to hold it and keep it. But the institutions have to keep it. The individual has the choice to give it up. And I mean, we're fighting against the people that have the discipline to hold it. And if we can't, I mean, we will lose the fight eventually, you would think. So it's like we should learn the way that they do it because that's the best way. There's no better way to do it. And they don't settle for anything less than the extreme. And they keep control. There's no waiting and hoping for it to come back around. You try a level, you have a tight stop. Risk reward profile should be the reward should be far greater than the risk at any given time that you decide to take the trade. But when we know that today, in particular, it's an anticipation for a meeting tomorrow, and the meeting tomorrow and its exposure to that meeting could be the ticket out of the middle on the daily and hourly, because we're right in the middle as I just showed on the hourly, and it doesn't matter where we are in this range. If we're here, we're in the middle in the hourly. If we're here, we're in the middle in the hourly. This whole area is the middle on this time frame. Because if you look at where those two spikes are, this spike is our current day right here. And that whole area is the 50, where the preliminary support started. And effectively that 188 from the third high, well, I guess you could call that the ending diagonal. This chart still grinding that medium bar, just broke the downtrend essentially. And when I can see that it's grinding with lower lows like that, it's probably one of the hardest ways to get exposure on the long term. But one of the most valuable things in this environment is the fact that we've literally ran into, remember this range at the bottom? Well, it doubled to get to the green bar, and it tripled to get to this line. This is the 341, 361 where it reversed. And I remember distinctly that it was this bar on top of the 261 that really got us there. That was like the perfect distance that it had. It was very much so yesterday, which is strange. So I like to look for things that are that particular as well, even if they are unlikely to be formed by the average, public. It's very likely that their precision comes from expectations from the people that have the choice to move the market. It's very unlikely that it's just random movement to amount to mathematical precision like that. But it's like a language that's expected to be understood by those that practice it, basically. That's the idea of technical analysis. You know, it's very much like a language in the sense that you have words that comprise sentences. The sentences are what we use to really convey our meaning, right, and our intention. But one word can be used sometimes to really tell you a lot about something and essentially or whatever that is. And but usually we find that sentences are a little bit more descriptive, and you know their components are words, and essentially we have moves here instead, and multiple moves can amount to having, you know, a confluence like together, and they can have that meaning really clearly, and it's not just one thing that we're looking at, but it can be, you know, just like when we're talking, it can be like one thing, one word can mean a lot, you know, like you know, and sometimes it's only one word that needs to be said, just like in this. Sometimes there's a lot more than one word that's required, like 8 moves in an inverse head and shoulders to a head and shoulders, and while it's doing that, it's formulating this pattern. Now, ironically, as I mentioned before, it's more important to form the patterns than it actually is to play out. It ended on this pattern right here. Well, what is that pattern? That's a head and shoulders. It's a bearish reversal pattern. It even comes from an uptrend, doesn't it? And when we had that, it did anything but go down. It came back nearly as hard as it came down. Made a W, which is another bearish pattern. Effectively, it came down. But does it end? Because we've done this now. Could we be making another inverse head and shoulders? After all, it's very similar to what we've done before. After all, the S wave that I was talking about before with the 261, we've managed to make a little bit of that S wave happen. It's managed to meet the equilibrium. It's managed to get back to the B point, even though it's not off of a respectable fib. This is how the SPY ended up working out. If you remember from earlier, we were talking about the trend break. It managed to break the trend and then hit the 188, come right back to the B point. Now the SPY is at its 261, responding positively to it. I think, get back to a blue line here, ironically. 6 of one, half a dozen of the other there, but it is apparent that that blue line really. Oh, this is the SPY.
Oh, 261 from where?
Yeah, from the SPY, yeah. So
yeah, you're muted.
I was muted? Oh shit, yeah, I accidentally hit the mute thing. Yeah, that's the SPY. But man, I was literally talking like on the people on the stream will be able to hear me talking, which is ironic because I was talking and you were responding to me. I was like, it's the 261. You're like, oh, the 261. I was like, and then you were like, you're muted, and I'm like, okay, weird. Sorry about that. Anyways, yeah, no, that was a brain twister. The The 61 speaks to me though as well. We've been seeing it on bigger moves today rather than smaller moves. The smaller moves, it hasn't been showing itself really at all, which is really weird. But the bigger moves, I find that we've been getting through the 61s, but we've been getting to them at the very least. And I wonder why it is so anti-61 today, honestly, you know? Like, where's the biggest 61 of the day?
Down. If you look at the higher time frames, like I don't normally look at the you know, those red lines and the green lines on the RSI bars that tell you, hey, we're going to be going down, we're going to be coming up.
Yeah,
They've been pretty bang on. But what I have been looking at, it's the same thing on the hourly, but I looked at the 4 hour. In the 4 hour says we're coming down.
4 hour. Let's take a look here.
Yeah.
Well, the 4 hour does look pretty bearish, yeah.
Yep. So when we're going up, we're seeing probably 61s all day.
Well,
But when they're coming down, we don't see them very often, eh? Just different fibs.
yeah, I think it's 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 just one confluence though. I find um
Yeah, of course, of course.
it's just one confluence, and I'm like, I wouldn't believe too hard in anything, because like if you're convinced right now, you're gonna be and making a trade in the middle, right? I'm like, no matter what we find here, we just have to resort back to, but it's in the middle though, and it's like, but as long if it changes that, I'm like, okay, well, and it's like, but it's exposed to the report tomorrow, and it's the middle, and I'm like, well, those are two major like major dangers, I would say. The middle is a danger, and the report is a danger. And I mean, for existing positions, to hedge them is the only real play of the day, and I find that that's going to be one of the plays of the institutions. But they're going to be interested in knocking on these highs again. Now, back in the day, right? We made two highs. I remember talking about them earlier. Two highs on a red zone, okay? Two highs on a red zone. And then it dumped off. But both of the highs on a red zone had a really negative response. Now, if I go back 5 minutes, it's going to look a little crazy. I'll try and clean it up a little bit too, actually. Well, I actually don't need the yeah, we'll look at it here. Let me just take off some of these for a second. They're incredibly short term.
Which would you take off?
Oh, you got to take off anything that's poking vertical. This is a short term
Okay,
chart,
okay.
so I take off all of these, and and any bars that aren't protruding into the future, they can all be taken off as well. And any shapes, like I've got pictures of all of this in the chat, so if I like look at the time and I'm like, oh, what were we doing there? I've also got it all recorded so we can look at it as well. But it does create lag, and um, basically what I'm trying to show here though is the fact that this was a level, like it was a very tough level, and I'm talking about this one here actually. This is the red zone, and it has like a little gold bar, and I believe that range comes back from June, and so it's old. And we ran into it here, and it created a relatively large dump. And because it was 245 points, doesn't look like that much movement, but it's a lot of movement. It's 1.63% dump on the market. And then when it did it again, same high, right? Okay, as it had here, it did it again, and it fell all the way down to here, 450 points off that level. Now, what was funny is that was the move to have bought into, because there was no better place to have bought than to have bought down there in aspirations of that move to be taken back. Now, look at how far they came back on you and how far they came back on you. Remember, there's no better price than this one. This is not a better price. This is not a better price. But this one could be held. When you capture exposure to the break of the downtrend, like that was the name of the game on that day, and it reversed, just keep in mind, at 2:45 in the morning. Anybody that bought and held from the previous day, like if you bought stocks or options,
That was
yeah,
a nasty one.
yeah, and I'm like, it's not the first time that they've done this either. Like think about where the dump happened from. Why is it that it's 1:10 in the morning? Not because of the American public that these moves are really catching the best price. Suspicious, ain't it? That nobody's awake when it's doing the best price, and it's I just find that suspicious to me, because who can trade after hours? What can you trade after hours? The derivatives, the things that people use to hedge. That's what's funny to me about that, is that the hedgers get the best price overnight, and it's been that way for a long time now. And the average person already they jump in, to a day where it's already moving down from the high, so they don't feel like they should short it because they're shorting it low, so it keeps going down. Then they buy it because they're used to it going back and forth for so long that they're used to it responding to the middle, and they try to buy it and it doesn't work, so it's at the whim of whether or not they keep dragging their stop down, whether or not they try again. If they add to it, they could lose their account. So it's like and at the end of the day, when they get stopped out, they fuel the liquidity for the institutions because somebody's buying their stop, or else they wouldn't get filled. And I think that they keep it. They keep as much as they can. But and hedge as often as they can, because then they keep that safety net open as constant as possible. They keep control by owning for the long term, and then focus on the short term trading against. You don't have to figure out as much where it goes up because you're already in, you know it. But figure out where it comes down from. That's the real money. Keep holding for infinite long term upside. And your hedge ability, you can only just continue to choose to add more to your position when it does go down, or you can choose to hedge with more when it goes back up, or both, bit of both. You know, it's like, but to understand the concept is the first step, or else you're going to be thinking of what to do in the situation, and when you're confused, I wouldn't be surprised if you just sold everything and said I'm done. And the path to understanding it is to continue keeping that long-term trade, continue focusing on the short term, so that you can protect the long-term interests, keep control of that short term. And you know, people struggle with this idea because it's they're either a long-term trader or a short-term trader. I started as a long-term trader. The more I learned, the more I saw in the short term. Because the long term doesn't change very much. If you watch all of it, I mean, good luck sitting there watching the daily candle all day. Imagine that, eh? Imagine you only traded on the daily. You're only allowed to look at this candle. How much information can we get out of the movements of the day by just looking at this chart? Now, let's say we changed it and I was like, oh, maybe you're allowed to use the 12 hour. You get 2 candles. Well, that doesn't change much, does it? So is this an incredibly effective chart to only trade on? Or should we take some time? Because look at how quick I can change the 1 minute. 1 second. I changed it. Now I can see how long did it take to observe this, as quick as it took to observe the 12 hour. I can see the information that we're in consolidation, and it's very clear. How much time do we need to spend on this before we can move on to the next pattern? Before we can move on to the next, understanding? And if we understand what's going on in this one, is it not true that we can move on to the 6 hour and then we get 4 candles? And then so on and so forth. But how much are we going to get out of 4 candles every day? Are you going to need a week before you can see any pattern? That's going to mean it's going to play out one 5-wave move for you every week. That's very rough. So if that's all you're going to go for, then that's fine. But at the end of the day, to capture that move, are you going to have bought it when it signaled that it was going to reverse here? Can you endure all of this chop? And when you've caught the best price, can you endure it to pull back? Or will you only have 1 share left by the time that it gets up there? It's like these are things that they're really, bold considerations, I'd say. But it's true that it's better to think about them than to have them hit you in the head. What's up?
Did you notice that just on this short-term move, it retraced 61%, spiked and went up, continued to go up?
I didn't notice that. That is impressive, though. I do like that.
Yeah, I just noticed it now. I should have been looking for it, but I was listening to you.
Yeah.
No, I should have been looking for it, but yeah, it spiked.
Honestly,
how it's gonna go, but
the biggest consideration for me personally was this gray bar, the thing that ended yesterday, and the thing that we use as today's support. We've already used it once to end the spike, and we tested it from both sides so particularly, not even just on the short term, but on the bigger picture too. And I'm like, a line like that, with that much confluence, because it's been responded to with absolute perfection from both sides for so often, and been such a pinnacle of reversal that's caused such a big reason for people to look at why this high was. And honestly, like, we can see that high, it is the same exact angle is
yeah.
is the trend that we started with. And I mean, this is the original trend, and that's the same angle up there that we used. I mean, we may have even used that again today. It's getting a little hectic on there. Let me see. Bigger picture chart patterns. Oh, we haven't really used this today much. I mean, the bigger moves of the day, like if you consider from the very, very highs of these moves, where the baseline began, curious if I double it. Nah, we haven't done it in reverse. I was just double checking. But essentially, I can see that everything has been bought back up to the 261 as well. And it's been common for that to happen off of the 300 lately. It's been a little bit lower than the 300. That was an old 61 variant that we actually hit as well. There. But you know, tomorrow as well, the report. What time is it at? I'm curious. It matters. 4 open. Okay.
Yeah, same.
So that
Same as
means.
this morning. Yeah.
So you know what that means is that all of the individuals that can't trade after hours have to make their decision today, whether or not they want to be long or short or exposed or hedged in any way to the report in the morning. And you know, futures traders, you can trade at, you know, there's only an hour that it closes down, so you can trade any time pretty much. And time that it does close down, they make sure it's super slow, and it usually is. At the end of the day, um, you know, QQQ still is open during the time that the futures market is closed, ironically, but um, in its after hours low liquidity environment, and some stocks as well. But essentially, I can see we're hitting the VWAP from the underside here too. Something that's been honestly an incredible barrier, you know, from both sides. I can't deny that it was difficult to get through. It was difficult to get under, and I think that we've used it enough to actually be getting ready to make bigger moves away from it. And there should be, I want to say, less consolidation. Like, a lot of people will be looking at this area as something that caused this consolidation. And it is. I mean, without this consolidation, we wouldn't have this node here. So that node, I can't help but notice, has created sideways, up, then big down. And we're here. We've broken all of the downtrends that made the big downtrend. Every single line that you can connect down has broken to test the underside of the sideways portion. And we're left with something that looks like this. And also, the idea that it made a very predominant downtrend, responded to it multiple times, but it was true that anybody that got exposure to the break of that line, ultimately, you know, it was a tough time, but it did have the break, and the break, since it broke, it never went back to that kind of environment. So with that break, it could be said that the environment has changed, because clearly things are different. So it's like, well, that's it. It's hard to argue that point. I'm trying to argue it personally, but it's not one thing that I could say is, let's say we look at the average counter trend pullback. You know, are we contained within our average counter trend pullback? Now I look at this one, and it's not an average counter trend pullback because we've only ever done it once here. But it looks like what we've done again. And if we've only ever done it once and we're doing it again, could it be second and fourth wave? You know, it really does ring that bell. However, what we did here was spike into a previous range. Now remember, we used this range really well yesterday. It was here for, I would say, too long, and then it continued to use it for even longer. And you know, that's just ridiculous. You know, at the end of the day. So look at the node that we've created along that level. A giant node puts the entire amount of volume we've done here today, basically is nothing in comparison to all this down here, as you can see on the volume profile. The only thing I'm looking at there. And one thing that I could say is that this line here, we're not really breaking out to it. We may break out through it though. Because at the end of the day, this consolidation that we have here, typically I would make it like a blue bar to have it stand out, and I can. But just as an idea so that you can see that the blue bar is the existing or the original channel, should I say, and then, getting to the green bar, to the extreme of the green bar is doubling it exactly, okay, to the 200%, right? And when we've doubled that, if we aren't running to it and we decide to chop at the same level to it instead, it's honestly something that can propel us forward. Sometimes it's even in a secondary low fashion. We have to watch for that. At the end of the day, it's not uncommon. I question actually whether or not it happened in here. I only put this one here like this because I can see that this move hasn't really produced itself out of the other side, where typically that would be the distance that it would be interested in. And if it doesn't make it there, it could make it from the break of the green line, which I am interested in. And to remind me of it, I will leave this here. I can see that making the same move as we made before was a predominant barrier. Now, ironically, that level, I don't think that it's a predominant barrier in the node. I think that, we could see it get even farther. 61 worked again. So it's like all of a sudden, when we got out of this blue bar, we started seeing 61s because that was the one that Randy mentioned right there. And then it happened again. It led to a 61. Because this move right here had a 61, and then this move right here had a 61. So those are two moves that essentially led to a 61 in an environment that seemingly didn't do 61s. And we suddenly break the entire downtrend and we see them again. It's interesting to me. Very interesting. That's an example of the environment changing based off of like, it's like, okay, you know, good luck if the house is still standing if you take the foundation out or something like that. And it's like here they took the foundation out. Good luck if the consolidation still remains with the same environment if you take its barriers away. You know what I mean? It's like we could be in something completely different, which is true that we are. In order to get out of a downtrend, you have to form an uptrend to do it. At the end of the day, and this is hardly an uptrend. It's basically breaking it as a sideways trend. But the downtrend will break and leave the opportunity to plot an uptrend, even if that uptrend isn't very steep and it's across, what looks like a sideways range. It still has to form for the moment that the downtrend is breaking. The downtrend, of course, can be readjusted really easily as well. Like that yellow line that was in there before as a, like kind of like a short-term downtrend. It was used really well. It was even retested. But when it broke, it changed things. So it did its job, essentially. And it happened off of the medium bar, which, I mean, without it makes it very, very difficult to see that it's using something that's so central in the range, but it's on an angle. And in order to clean it up a little bit, that level right there, I'll just make it a gold dash level. And you can see this other blue one that we had there. That one was a 1, 2, and 3 consecutive lows that came up more than the first of the 3. I remove it as well. The pattern that we had originally at the beginning of the day formed. Inverse to head and shoulders. The first low, a little bit different, but you can see they both share this move as the shoulder, and it should be an 8 sequence move. 1, 2, 3, 4, 5, 6, 7, 8. Crosses 1, 2, 3, 4, 5, 6, 7, 8 times. A little bit of an angle. It creates this kind of like environment where people get exhausted by battling it, and when you look at it, it's like battling it for what? A position in the middle on the long-term time frame. Like, it's very easy to get tunnel vision on a day where it's like it's not offering very much, and it's likely to end right back in the middle as well. 100%. The major elephant in the room is the green bar. And the green bar is infinitely moving with the price until the price either holds a barrier for long enough that it runs into that, or we run to it ourselves. We've just created a new trend. This one. We can see that in this fib set, having not made it all the way to the doubling point, we do have the blue bar as a barrier again, as well as the gold one. But it's getting increasingly more difficult to be associated with the blue bar from the upper side as time goes on. It's likely to end up back in the middle, and it's also likely to not really change much of the long-term momentum as it does it. It's probably just going to look exactly as it does into tomorrow. And I'm like, well, the other major reversals of the day today, is it not true that it started with 3? And then when we did 3, we came back to the first of the 3 every single time, right? Every single time that it's done 3 major extremes, not only highs but lows as well, is it not true that we've made an effort to come back to the first of the 3? And is it not true now that we have a move like this, of equal caliber, almost the same size? You could say that they're related. Are they not 3 as well? And could we return back to the first of its 3? It's only been what it's been doing. So I mean, obstructing its ability to do that, it might be might not be the best idea. So allowing it to make that is pretty important. Another thing that we've seen, aside from the head and shoulders, it's look like this, where it has like an increasing high like that, right? And the right shoulder is on top of the left. This, where it makes the left shoulder, or it's been on inverse mainly, where it makes the left shoulder and then the head, and then it comes back to test the head and then rally. And it can be a very slight incline. Like there can be like the smallest distance between the two like that. I've noticed the smallest difference between the two highs and lows. Very, very extreme. This did remind me of that day that we did do that. And it's basically a cross between this and it making it right to that extreme and reversing down, which is pretty normal. And like when I see days like this and they're, you know, centralized in the middle and you know, difficult on the people that are going for the break of the largest trend, um, it makes me think about the value of keeping the extremes, and it makes me value them that much more when they're caught. And if all of the time spent in this area is spent getting exposure to that gray bar so that we can break the green one and get out of the range, um, it's not typically easy. But hedging back against it is way easier, and I think that was the play of the day. Like I said in the morning, the institutions already wake up with long trades every day. Their job is to hedge them. That's why they're called hedge funds. They hedge the fund. At the end of the day, the fund is always long, you know, and because they want ownership in the companies for the long term. It's risky to be short with that much money. You have infinite loss potential. It wouldn't make much sense. Make the core short, but especially when you've got all the time in the world, because the institution never dies. Like just has different people managing it, but they have the same expectations as the last, if not better, you would think. But the third did bring it back to the first. I can't help but notice that we were like, okay, we did this move, and we're here now. And it's a thing. We do this very regularly, but it's not too far off. Typically, you know, you could even get it a little bit higher or a little bit lower, but it tries to be pretty even, and it's often what I would call like it's like splitting hairs basically. At the end of the day, exposure off of the gray bar to break the green one is worth more than any short trade that there has been in this range. May take a little bit longer as we get to this point. When I mentioned when we get to this arrow, there's going to be a lot of chasers like we saw before. We had to deal with them. And there's not going to be half as many chasers when we get there next time. The arrow managed to get a little bit past it. It's still the high of the node. Like, take a look at that arrow. It's not just one level, it's this. Which is the high of this entire range that it's consolidated in. Because that's where it stopped moving really harshly, and that's where the gap is. The other side of that gap are untested B points. The value of being exposed to the breaks of these lines, yeah, it's difficult because it's worth potentially more than those B points. At the end of the day, they don't want to make it easy for people to get into tomorrow with the best trade. And it seems like it might be a long trade. They might make it difficult till the end of the day and still be in the middle by the end of it all. Because getting back up to this gold bar or gold line is the 61% retracement yet again on a longer term scale. And it's pretty centralized in everything. Like it's just the middle of everything. It's where we started pretty much. Start here. 9:30. Right here. Yeah, we started here, man. It's like, what? Okay. Yeah, so we're gonna end there too, probably. I wouldn't be surprised. Well, we're gonna end having seen that spot again, most likely. Do we end exactly on it? We shouldn't care about that. It's getting to it that matters. How long it spends there? It could spend the rest of the day there. It could make a triangle there. In fact, it could make this triangle there. This exact triangle. We haven't really seen it much, I don't think, but I want to check it out. Let's check it out. This triangle right here. I wonder. And I don't even think it's supposed to form here, but I just wonder if it's using that same confines, the same kind of confinement area, sorry. Not really. It hasn't been very triangular today at all, actually. I'm not complaining, but that's likely to come. It's appropriate to be in the middle there, which is fine. Nothing's wrong with that. You know, what we could even see is it hit the B points and then come down to make the triangle there. But just remember what I said about this green bar. If we don't break out to it, we break out through it. And this here, I want to keep it as a pinnacle of what we could do. Usually how it works in a day is we do this first, this second, and this third. And I mean, we've done a very nasty way of doing this for sure. This is the major test of integrity. You can see the 61 getting a response. Again, and anybody that essentially chased the breaks of the trends gets, you know, caught in a retracement, which could be referred to as a retest. The slowness is intriguing. We're at the low of the node here as well. That's pretty significant. There's no bigger elephant in the room than that green bar. That's the one that's coming down. And it's related to this red one too. Also, we'll bring that. But only on breaking the green can we ever get to the red. And, you know, the time that it has here is relatively minimal. I mean, it could speed the time up by going up to it, but is that always the best way? No, not if the people are in the way, and they may be, so the need for chaser retracers is common when there is a lot of chasers, so it's unacceptable that they get, you know, allowed to take the trend when, you know, they're buying it so late, basically. The market is saying when it does this, you know, like, because why would it be, you know, like when it gets into a channel, right? Why would it want to go into a channel and then break out, right? And retest everyone that wasn't in the channel before it broke? It's like, oh, you didn't find the value in the channel breaking. Well, you wanted to buy it late. Well, we come back for you. And that's true so much of the time in many of these trends. And what's left are the people in the low volume area. I mean, why would it have to come back for them anyways? Sometimes it does. That's how third drives are made, of course. But now, you know what's interesting? Is it's been down here enough for the 1 minute to have changed its momentum multiple times, but since we've ended the big dump, there's been nothing but increasing momentum on the short term, which can bleed over into other indications. You know, if we're not, take a look at that 12-hour again, daily. See, the 4 hours bearish, but the daily is bullish though. Still unfazed by any sideways consolidation that we've ever made. So it's like, that's an interesting move as well, but it's not meant to make you think anything, because we're in the middle, and it's meant to make people like get fooled into making a position in the middle of a range. And I'm like, you know, whatever direction that we leave this area, because it is in the middle, it's likely that it's going to be seen again in the bigger picture anyways. So it's very much, you know, they're trying to avoid people having short-term exposure to an easy profit on tomorrow's movement. And it looks like tomorrow's movement could actually be pretty large because there's a lot of anticipation built up to it, as there's been no real trend that gets us away from the middle. Remember where we started. And yeah, there was a big move from the high of day, which is away from where we started, but it's honestly not far away at all. And what we've done is went sideways, up, and then big down, which is a bullish pattern. It means that this could break out and like quadruple to the upside, so we have to be careful. At the end of the day, it's not uncommon. And it just keeps reminding me of the time that we responded twice to this bar. And It was the resistance level for like ever. It was really, really, really hard. And if I go...
Just wait for a second there, John. Did you get that latest retracement here down to the 61?
Yep, the 61, yep.
Okay, good. Yeah. Man, that happened quick.
Man, it's been showing the 61s ever since it left that blue bar. So I noticed that on this chart here, I'll go to 1 minute. The first 61 that you mentioned was actually here, the retest. And then it did another 61 there, and then another 61 here. I marked that one in there, like that one.
Yep.
And now we're back at that green bar again.
That VWAP's played a large role too, you know.
Oh yeah, man. I didn't even think it would be that important, but it is.
Yeah.
And it's yesterday's.
You had it in there first, and I just noticed you had it in there, so I put it in there. So
Yeah, no, it's good.
Relevant.
It's good. I think I put another one in there too, actually. Yeah, I've got two. They're relatively short term as well. Like this one starts from here. Another one starts from in here.
That was a huge volume candle, though. If you look at the Ninja Trader on that.
Echo volume. Yeah. It is. Yeah, the S wave too, just marking itself in here very clearly. It's like it woke up at that point. And you know where it went to was almost the 61 again. I've got that marked from this move from back over here where we could do a 61, and it's like it attacked it again. And you know what that reminds me of? It reminds me of what we did up here, where we attacked it and we attacked it and we attacked it and we attacked it. And we'll see how we treat it the next time we get to it, the third time we get to it. Because the third time that we got to this gold bar, well, it's not on this chart, but the third time we got to that, we wanted to make sure it broke, and it did. And it was a fight for the break of it. Because what I wanted in that was for it to actually retest the high of it. Yeah. Before leaving. Get above this level and then test it from above. And that was the controversial level that we hit twice at that other time. This was the second time. Okay, the first time it was in that rising wedge. The second time, it responded negatively and had nearly an entire retracement. It was kind of like a test of integrity for the people that had the short. And then they got exposure to a major move down, only for that to be a giant spike on the daily and come nearly all the way back to where it started before testing the people out that had exposure to it. Anybody that tried to chase that move all the way up, they were part of the retracement. And then again, it happened another harsh retracement second time. But when we got to that red level again, the idea is that we came back and tested it from the other side. That was the Israel and Palestine war starting. But the idea of testing it from above was good.
Short term here, John. What's your profit target here?
The
Red zone?
on the other chart, well, the red zone is the high of the range, and that's ultimately a really good target. But I like the POC. You know, just the 61 of this move here, like the
I'm on my POC now, but I guess it just depends how much you scan out.
yeah, like zoom out as like and see the whole chop today. That's the POC I like. Like the
Okay.
right smack dab in the middle. So it'll look like the middle on the short term, middle on the long term, middle everywhere, and that'll make the institutions feel safe for tomorrow. And I think that's what they're going for. They want to keep everyone in the middle, and all of the opinions from today are pretty much going to be put to the test because it's not actually going to, you know, have went much for many people. It's going to have ultimately came back to the middle. And I mentioned yesterday that we could get, you know, more of those really sideways days in the middle on the daily. Like, you know, I was talking about how we could get, you know, days where we could spend in like entire ranges inside of here. And you know what could happen is tomorrow after the report, when the report volatility dies down, it gets stuck in a range that's really tight. People will be pulling their hair out. They'll be wanting that volatility so bad, but they'll be so late, and it's gonna be really interesting, I think. But it's gonna be the development of a bigger long-term move to try and get out of the range on the daily, to try and complete the Wyckoff, to try and do the up thrust on the daily. And I don't think tomorrow's report will stand in its way. And the way that we got up here too was off of, very, 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 very specific, articulated, like, or orchestrated, should I say, moves that I can just say could not be the work of the public, but the intention of the institutions. So I think that they're interested in hedging that position. That's, of course, they're the hedge funds. They hedge. They're going to be interested in hedging. That's the name of the game. A lot of them will have a hedge, and I mean the ending diagonal is a really clear pattern, and it's essentially worked out really well.
The secondary low, much easier to get than the first low.
Yeah. Well, one thing.
Looking at the 15-second RSI, it was just easier to get. I'm just thankful that.
Oh yeah, 15-second. Yeah.
I mean, even when you look at the 1-minute RSI, it was kind of jumbled. Whereas the second one was pretty decisive in what it was saying.
Well, another thing that I noticed today as well, like when we were down at this third low here, is I was mentioning that today the 3 drives pattern has been incredibly predominant. Even from when we went 1, 2, and 3 down into 1, 2, and 3, but every single one managed to get the first of the 3. Every single one managed to get back to that first of the 3. It doesn't matter where it was, they were all really good about doing that. And that's not really much of a move in some cases. But here I saw that it was like, oh, making this move here and then making that same move again. I was like, that's they're related. I mean, they look the same to me, and it was as simple as that. And I was like, well, this low was more than untested. It was 18 points away. Funny enough, anybody that bought above that point was knocked out in the 61% retracement. But the 61% retracement was a necessary retest so that we don't have to retest.
This thing's right at where my VWAP is right now, and it's having a hard time getting through there.
Yeah. Well, I got it a little higher, but I do see that one too. You got 2 as well, right?
Yeah.
One at the bottom? Yep, okay. Well, the thing that I like about this range is there were so many characteristics inside of that blue bar. And when it broke, it changed everything. Ironically, it stopped its ability to really be able to go down well, and it started doing 61s. Whereas before that blue bar, I don't think there was a single 61 that was effective. They all failed to get to some other level that, wasn't a 61. And essentially, it could have been a 261 or whatever, but that's fine. They also have been struggling too, though. It's like we've been coming back to them. The people that try them get burned. I mean, that's not very nice, though, is it? So, it's like it's important to know though, because like if you don't know to watch out, you might experience the reason why we're watching out. It's like, and it's tough, to experience it rather than just to know, okay, this is a danger. We don't have to experience it to be able to avoid it, but to understand it and that it's out there. We can take the precautions necessary to make sure that we're not in its way, or that we're preventing that danger from happening. Because like if we prevent a 61 from happening at any given time, we drag our stop too close to the current price and then it decides to do a 61, if they are oh so common, it should be within our strategy not to drag our stop above a level that's obviously retraced to so often. So it's like that becomes a major consideration. And I'm like, okay, just like we had a blue bar here, we'll have another bar going, and it's a bar of the 61 essentially. It enjoys the 61, which is fine. You know, more time spent at this level, less things from this dump will be affecting us. You know, as we get through this red line, it too may increase the controversial. It might increase the volatility because it is controversial. The idea that we're not really breaking out to that at all. You know, breaking out to it means we're chopping the highs down and making, you know, new advancements, and really we're just coasting along the same high, which is not progressing or breaking through a level whatsoever. One thing I do see here though is that we had a very clear confined consolidation. It's producing a very similar move on either side. Which, I mean, I'll tell you one thing, it puts a lot of emphasis on the entire downtrend when it does that. Like right now it's retesting an old one, but it's also created a new one. Because undeniably, until we break this new line, we are in this downtrend and contained under it. And only breaking it will change that. It has nothing to do with this one. Because it's broken. It's up. No good. Unless we get under it again, it can break again, but it's never the same as an unbroken trend line, and it's never the same as breaking the new trend line. The one that is the existing trend line. Because we get back beneath this one, breaking it doesn't get us out of a downtrend anymore, just gets us above this one. This is the only line that really can get us out of a downtrend, and exposure to its break, the only real value to catching the reversal. We have to consider the imbalance, or not the imbalance, the VWAP at the bottom. Balance is still really far away. Basically, there's like a blue line here that we're going to be interested in testing again from the underside. We came back to test both yellow lines. This line's now tested. Getting back underneath that other line, and you know, honestly, I could turn it up a little bit again. It's not the downtrend, like I said, anymore, but it is a downtrend that we have to break to get to the downtrend, so it could be a barrier of consideration. Something that could either work as a resistance barrier temporarily, but something that has to break to get to this next line. So on breaking it, we could consider that line and how it breaks it. Well, whether or not it's part of a pattern like this one, or a head and shoulders of some kind. It did find a way again to make a third consecutive low, even if it is only 1 degree on the second low lower. The 188 200 to the B point in the middle. I can see that this area that we've had is kind of the opposite to rising on W's but falling on M's.
QQQ at yesterday's close.
What's that? Yesterday's close? We're at yesterday's close?
So that's
Yeah.
where it's at right now.
Yeah. Yeah, yesterday we had an incredible consolidation here. The it lasted quite some time. And basically, I like to look at the node that we have there too and see that, all the volume that we've had in that area, it really did like to sit on top of that gold line there too. And we could see that a little bit more in the future. But we're grinding that green zone right now. We can see in the short term, we just came back up to hit that blue line. That's very, very common. And if you're into the moves in the very, very short term, they can lead into more. But by the time that you've taken a trade back up to hit a level like that, it's very important that we start to think about pullbacks and start to think about secondary lows and making sure that it's safe when we hit targets like that. But of course, they're very short term and high risk, especially in the middle of the range. But it's better to understand it than to obstruct it from happening. That's for sure. But we do have a B point that's up here as well, so we're gonna take a look at this. I make those ones green because they're untested, and of course now we have to essentially associate ourselves with that green bar again to be able to get to that target. And it could simply just look like green zone to red zone, like we saw so many times yesterday. The irony is, though, is I've noticed that when we've been in a range and it was so recently obvious that it made such an effort at going from one side to the next, it was actually more common to get grinds on one side. Then eventually, yeah, it would lead to the other side, but it would make it tough for them. And I'm like, well, this market environment, I'm like, yeah, we could see that. At the end of the day, there's so much grinding that it can do before it runs into barriers like this green bar. This green bar, again, like it could be something that could increase the volatility. Something that is a controversial barrier. Because since we, essentially ran up to hit that level and sold off to hit the 61, all of these movements have been orchestrated differently than what we saw in this area here. And it is clear to me, very clear, that something happened here. And when we hit that level, the idea of getting to that green bar and responding to it, they turn the robots off there. They stop buying there. And it had a 61% retracement where it very suspiciously was bought back up to the same level. I think that they're going to buy everything back up to that level until it breaks. Because they're going to get into trouble if they keep buying past that level, I think, for market manipulation. Their position is allowed to be bought up to this level, I think. We'll see more of that. Almost like it could be a white dash line.
Still not the 188 200, eh? Oh yeah, you got that. Okay.
Yeah, yeah. Yeah, the 188 200, green zone to red zone. And it's also the controversial gray zone from yesterday's high. Isn't that weird that yesterday's high is now coming into play when we're meeting yesterday's close as well? That's kind of strange. Very strange that an indication from yesterday's high could meet at the same level as the close, which was at a low. Kind of strange. But both are controversial levels. I mean, this level would already be, uh, you know, a recognizable one because we spent so much time there yesterday. The volume still is maintaining, and I think that these are the last few moves before they take full control of the position again and ended up back in the middle. It's like I didn't get the name 11 low zone for the consolidations that we had at the daily low because of it not taking forever and seeming like there was a million lows. It never really took 11 lows. It can seem like it can seem like 11 though. Like it was usually only like 7 or 8 or whatever, but I mean, if you take a consideration from the very, very beginning of this dump, you know, that trend was a downtrend here and it broke. It did break here. Technically, it broke here as well. But then it broke here, and then it broke here, then it broke here, and here, and here, and here, and here. And it's all been the same trend from the high. Yet, it continuously goes to a new low after every trend break. And not a single 3 drives pattern hasn't played out. That's what's interesting to me about this. It's common that that's the case. You know, the one pattern that I think thrives the most in falling knives as well, 3 drives. You know, it can be falling like crazy, and you see a third drive, what is it going to do? It's going to come back to the first of the 3. Like it could be falling 700 points, and then you see this tiny little pattern like that. It's like, yeah, we'll give you this, and then keep falling again. And it's like, I've seen it many times, many times. Not always is it going to work, but it is something that you shouldn't obstruct its ability to do it. Like say if you're dragging your stop down on a falling knife, and you're short, and you're dragging your stop down to protect the move, if you see that it's made that first of the 3 lows, it becomes unsafe to continue dragging your stop below that level because it's a target of a short-term bullish pattern. And if you've got a pattern or a trade that's going from a really, really high point, and you see a small pattern like that, doesn't make sense to drag your stop within its path of playing out. Not until it's either stepped beyond it or played it out. And you know, playing it out gets it closer to the entire downtrend break, so it becomes a really critical time. Anything that's not advancing with the trend is moving uh, against it and trying to break the uh, the trends that hold it into place. And that's where we're at right now. You know, we've been breaking this trend. What, like how many times did I say it broke here? Like it's been coming down and still breaking the same trend. There's only one point that's really changed. Now every one of those lines is a different line. It has a different degree. It's a completely different trend, but it starts from the same spot. That's a fact. And at the end of the day, one thing that it has in common is it has been the downtrend every time it has broken. Now, of course, it is a different line every time it breaks, but it has been the downtrend every time it's broken. So you could say the downtrend is broken how many times? And we're here, right? Now, I'll tell you one thing. The move will never end unless the downtrend finally breaks, which it will, or we're going down forever. You know, that's the logic, and I'll be damned if we're going down forever. You know, it's too many people make so much money off of it going up and moving around that
We're going up forever.
yeah, right, exactly. Yeah. That's the idea. And there's too many people, too many powerful people that are within the interest of it going up. And after I saw China reverse their price back to normal, I think, you know, we're definitely looking at doing something like that if it ever gets to that point, I think. It would be tragic if we had to take the gradual grind out of it, the honorable and slow way of actually building the businesses back up to increase their value. But other parts of the world, we can just change the price, which doesn't seem very fair. But I mean, you know, that's what happens. And I mean, maybe we'll do something similar, except it will be incognito. That seems to be the American way. You know, they like to fix everything before the problem comes out, and then tell us how they're fixing things has actually made more problems. But that's just recently. They used to be pretty good about it. But the prime example is the dollar. You know, one thing that I would expect that nobody really wants to be cheap. You know, you want the things that you use to pay for your assets to be as expensive as possible. At the end of the day, worth as much as possible to everyone else that doesn't have it. I cannot help but notice that using this green bar is going to become increasingly difficult. Like, it's like, think about where we will be come tomorrow and how much downwards movement we would have to make in order to retain this is a resistance barrier. Think about the gold line here. Did you know that gold line and how steep it had to be able to, you know, stay with it? Same bar. And it's got the same effect, the same kind of, you know, uh, usage of that bar, yet every single moment that it goes on, we have to continuously exert energy with it or moving against it. So it's working exactly the opposite for the red zone. We have to exert energy with it to stay away from it.
Large volume on that candle 25 minutes after.
Not much volume, say?
I just said large. I didn't
Oh,
say
large
volume.
volume. Yeah, it's funny. I can see that there's different volume on the MNQ and the NQ on that minute there. So slightly. Seems like NQ is getting a little bit more attention than MNQ though.
Look at the hourly RSI. It's certainly coming down. And the 15's definitely underneath it.
Oh yeah, we ended up coming up to test it, but then I think we're gonna do that again.
Yeah, I've been scalping some points off here. It's been kind of nice, 20,
Mhm.
30 here or there.
Yeah, yeah.
I just have 4 accounts, so I just switch in between the accounts, so I'm trading for at least 12 days a month on each account.
Yeah, yeah.
Kind of is nice though. Definitely having more than one account. You definitely need more than one. Minimum two.
Mhm.
Performance percentages on NinjaTrader and find out like what percentage you're trading at
Yeah,
on
I
a
never
daily
looked at
basis,
it.
whether it be long or short.
Oh yeah, okay.
And
Yeah,
yeah,
I know that they had that on Rhythmic.
yeah, I've been watching that, and that's what's really helping me in a big way. Just try and improve every day, right?
Yeah, yeah, of course. Yeah, today I haven't traded a whole lot. Taking it easy. Some days I'm more interested in the ranges than others, but today it is very centralized, and it's not like I'm fighting for exposure to a major move, so it's expected to centralize basically by the end of it all. And the closer we get to that being the middle, the better. Right now, it is pretty middle, pretty centralized. A little bit more to make it exact, but the green zone could do its job again and hold us to the red zone. I mean, it did, I think, maybe like 20 times yesterday. Really did a good job at using that range. That range was from yesterday too. Like all of these ranges they're new. This is a new chart, so
I took that trade at the end of the day yesterday, and I just held it overnight. Went up and like 100 points or something like that, and it's just at that point right now actually, because I had it marked.
Oh, did you?
Yeah. I mean, I cut it earlier. But yeah, when all the other time frames were saying, hey, it's going to come down.
Yeah, I think there's a lot of contradictory momentum timeframes right now. Like the daily it kind of like makes me scratch my head about the 4-hour being so different, the 12-hour being so different.
But when you look at the daily and the orange line there in the RSI, it still hasn't hit the bottom yet. So maybe it's going to hit the bottom, rebound, come back up, and meet the blue line. So
Let's take a look here.
You know what I mean?
And meet the blue line.
Like, yeah, see where the orange line is right now?
Yeah, that's the 15-minute, and it could come up to test the blue line.
Bingo. As soon as it hits that green line down there, right? That's a resistance line.
Oh yeah. That could be tomorrow's low.
Yep.
Tomorrow's low hits the green, and then rallies off the.
Yep. That wouldn't surprise me.
Yeah, because like if you look at what today's movement is, it like people that open the chart on the short term will see the entire day is going down. Yet, it just makes sense that it was hedged heavily by the people that have accumulated for the continuation. And I think that's going to display, and ultimately whatever we do today is going to look like we're in the middle of this range for tomorrow. And I think that it's going to struggle to go down initially off the move. A lot of people will be positioned for downwards movement. They'll likely end the day in profit just for it all to be taken back. That's what I suspect. Very high chance. Like incredibly high chance. Like people go into today thinking the report's bearish because they see downwards movement today. Remember, falling wedges go up. That's the idea. And if they want you to be bearish, you become a seller to who? To people that want to develop a position in the falling wedge. I think that keeping the hedge if you have one is good for the overnight hold, but ultimately it's going to go up, I think. And if your hedge knocks your core out, then you can use it as leverage to get it back. But it's like a game that you're forced to play if you dip your fingers into the short term middle area, because it's like it's in the long term middle. So if you try to trade the short term and it just ends up continuously reversing back to a centralized area because it's the middle on the long term, short term moves gonna find it hard to get away, especially when there's anticipation of a giant report coming out the next day.
We're going down here, and the only tech stock that's really come down is Tesla. Down by 2.5 points. I mean, Microsoft is up, Meta's up, Google's up.
Oh, it's AMD, Nvidia, AMD maybe. I mean, they're having a terrible day.
FOMC minutes here in a few.
FOMC minutes, yeah. Yeah, there could be some sort of initial move at 2 o'clock because it's not uncommon for them for it to be like a habit that it moves at 2 o'clock or just after. It's come to become
Last
really
few
clear
times
that
it's done absolutely nothing.
yeah, it has,
Nothing.
but it's
Even though
been
this is supposed to be a
yep,
high type report.
yep. I think it's
Oracle dropped quite a bit today too.
what's that?
Said look at Oracle.
Oh, Orsa.
They're doing the same thing.
Yeah. I mean, I think they're all gonna end up right where they started by the end of the day.
Yeah.
Everything that's down. Because I mean, tomorrow's movements are likely to they're likely to overlap a lot of what we've done today. It's very likely that the volatility can, not just be one directional, but actually be something that can snap around with heavy volatility. So they have been crap lately. That is a good point. And if it is crap, then I would expect the public to last maybe 2 hours before they leave, thinking that it's going to be dead for the rest of the move, and I think that'll open up a window for the institutions to actually move the markets, like they do at the end of the day. And why do they choose the end of the day if it's not for the people to be out of the way? It rhymes, and it's true.
The other tech stock I've been watching recently is ASML, and yeah, those guys they make the RF. Well, they make the chips that make the chips, right? They make the equipment.
Really? Okay. Nice.
So yeah, they're pretty good. They're getting ready to see a big deal. They're in the Netherlands, and they're gonna start seeing a big deal because the new 3 nanometer chips they're the only ones making the machine right now. So as soon as TSMC goes online, these guys are gonna get a huge bump. TSMC in Arizona, that is.
An incredibly high price
I mean, they make a lot of money.
relative to what they were at. Yeah, especially coming from nothing, like literally.
Yeah.
Was it free? That's funny. At the end of the day, it's definitely made a lot of progress. I like it for a short term, like an intermediate, like couple months. It's likely to be at the high of the node. Yeah, yeah.
They're going to drop here, and then beginning at Q4, you'll see them jump up. So we got a few months before we're going to see these guys really start making gains. Part of that has to do with there's a new factory coming online in Virginia or Carolina.
Oh, American. Interesting.
Yeah, it's for the Wolf Speed. They make silicon carbide chips, which are used in electric vehicles.
This isn't the nor what was it? The company we were just mentioning right now?
Oh, well, I don't know.
This is a different this. Oh, Wolf Speed's a different one. Yeah, okay. What's their ticker?
Yep. Wolf.
Oh, okay. Fair play. Let's take a look.
Yeah.
So short term, it's super choppy. Long term, it's actually very low.
Yep. I think people are trying to buy, get it back up to the 52-week high here after their new plant opens in Q1.
52-week high. That might be even much. Well, let's have a look here.
I know. I'm weird.
Well, one thing I do really like about them is the fact that they have a nice gap here and a nice gap here. I can see that the average pullback that they've made, is a little bit larger at the low here, but it's very similar to this one. And I'm like, well, that is suspiciously particular. Like 1, 2, 3, 4, and 5. And what we could see out of that is like a move like this that could get you up into that middle area.
That's the guess here. I'm
Yeah.
gonna make that move, but I'm doing for a few months. I'm gonna be holding this.
Oh yeah, it might chop for like the first month before it even gets off the ground, just to like make it tough for the short term people. Because there's going to be some chasers, I would think originally, and I mean it looks like it's pretty good about moving when it gets going. But
So
this
Tesla dogged this company because Tesla obviously doesn't use Wolf Speed chips in their electric vehicles, but Land Rover, all the European car makers do. So it's like Tesla fucks with the market, or Elon messes with the market by just talking trash. And there's nothing wrong with this company. They're just not used in Teslas.
excellent. Don't they make everything in-house? They don't
Yeah,
have
exactly.
it
And
made
that's why I
anywhere,
was like, why are you even
which makes it
saying it?
unique. Yeah,
Interesting. Yeah, it's not a
yeah.
bad spot from a technical perspective.
And surprisingly, I bet you're going to see Hewlett Packard make a big move. HPQ versus HPE.
HPQ. They're having a tough day today too, but I see that they're at, you know, pretty predominant support. They've responded to a gap there. I question whether or not they're close to the 61 on this major move here. I'll have to change it before I put it on.
They just introduced a new AI platform, Hewlett
Oh
Packard
yeah.
did. So we may see them come onto the market here and take advantage of that. You know, there's the program side of AI is starting to take off here, and I think Hewlett Packard has something to do with it.
Yeah. No, they could be interesting as well. Yeah, they're not necessarily high either, so in the middle of this last major move, but I do think that it is interested in trying to go for that downtrend line. And double upwards. Yeah, it would be interesting if they could do this again on the other side of that move. That would be the intriguing part, but it might want to happen off of that deepest part of that gap right there, that 61. It's an attractive level.
Yeah, what is that, 24? I like him at 24 too. You know,
Yeah.
that's a good price for this company. That's like Oracle at 90. If Oracle could get down to 90, I'd be so happy to get in.
Yeah, like I would say 80 even could be really attractive in the future. 80, but just it wouldn't stay at 80 for long. Yeah, it wouldn't stay there for long, I don't think, especially if it fell hard to it. But if it fell hard to it, it would have to fall hard to it without a reason. Like no like news or nothing like that. Like nothing to do with the company. Like if it was news on the market, that's absolutely fine. But if it's news on the actual company being crap or something like that, that would be risky to buy that. But if it's like, oh, market or war or something, it's like, yeah, no, it doesn't affect this company. So it's like, yeah, I would watch for that, for the market potentially to take it down to those levels in the future. It might look like my green zone on the daily there too. Because like what we're doing here on this major daily chart is take off these for a second. You can see the range that we've spent in down here, and essentially this area up here. I was mentioning that the people that have the short trades will be threatened before the green zone is seen again. And that was when we first got up there that I was talking about that, and you know it kind of threatened them once, and I think this is another time where we're gonna try and jab against them. You know, just looking at that chart for a second, aside from all of those lines that are on there, I can't help but notice that there's a big green bar here and a red bar here and a gray bar there. You know, this entire range is subject to actually doubling. Like, if it made a W that lasted into an M, ended right back in the middle, that would be more chop on the red zone. It would put a lot of people in you know, they'd be pulling their hair out in the red zone and wondering what's going on, and eventually the trend will break.
They should go up, right? Too.
Yeah, and it just gives them more trouble, but eventually it ends in them coming back down into getting these B points, because like this B point right here, it's never been hit, and like so many people will have just, you know, mindlessly got exposure to it. You know, the 188's up here too, so like, you know, fulfilling that M into W could really have a lot of impact if we get to a level like that. You know, and this right here is very suspicious to me too. Look at how close it is to the 261. At 19,000. And that's the distance that we made out of the bottom of the consolidation. So what if we choose to do that again on the top? Totally interested in it. Could be worth a lot. And I've used this chart for short-term analysis for a long time now, so it's kind of congested, but this is what it's for here. You can see that we've got a channel, and I think we're going to be interested in breaking that downtrend ultimately, get back into that range and making this point the middle. So anybody that captured a short trade from the 3 drives pattern, you want to make sure it's safe if you continue holding any hedges or any short trades. You want to be hedged if you're only short. Now, if you're not interested in hedging a short position that's captured off of a high like that, not only was the ending diagonal, but it was also a 188-200 on an untested B point that offered a decent amount of potential. And I'm like, let's take a fib set from this area here. Put it on here real quick.
Like I've only got the 161 here, you know, at the
Mm-hmm.
low. From a fib set to say the B point's at 1253 today. Like sometimes when it goes down like this, what I do is I just go to the 5 minute. It just gives me better clarity on maybe where we're going.
But that's interesting because I would think if you went to 5 minute, you would put it, your B point on 1030. And I'm like, dude, it's like 161 again. I was like, I thought you were talking about that one. I was like, wait a second, this one is also doing that same kind of thing. I mean,
I don't want to get too big on the fibs
mm-hmm.
because I still want to take a move if it happens on the 1 minute, you know.
Yep.
So
Well, in this case as well, like I just want to point out as well, the one most effective pattern of the day for long traders is going to be the third drive pattern. When we make a low with a lower low and a higher low, it at the very least has given this point. And even again here, we can even see like even smaller, 1, 2, and 3, it can give you that, or even if you consider the last 3 that it makes, it's just seemingly, I can't find one that's failed yet, so that's another major thing. So I know that that has offered at least 10 points, at least 11 points actually, every time it's gone back to a first of the 3 lows. That's been a very, very intriguing fact of the day. I mean, if it's like the third drive is as common as the 61 was yesterday, I would say. It's like that's how I'm starting to think about it. And just like yesterday, we may not even see a third drive pattern at all tomorrow. I mean, like, it's true.
I found this one down here at the bottom of the 161 just a little bit more difficult to take, and I didn't take it. I'm just looking for further clarity because there's been a lot easier moves happen.
Mm-hmm.
And I know there was divergence there a bit on the 1 minute RSI, but catch 3 drives. You can see it there on the 15-second real clear on the smaller
Oh.
smaller range area.
Oh yeah, yep.
The whole time you can see the RSI lifting up as it goes down further down.
Mm-hmm.
So
Even on the short term, or on the 1 minute, you can see that.
yep, yep.
And now we're at my other yellow line. And we finally detached again from that green. Like I mentioned, it was very similar to this gold bar. And we're treating this red bar now, and this is one of the last few bars associated with this range. I'll show you the next one, the one that it usually ends at, the one that it usually hits, and I make a gray bar. Just like we had this gray bar here. What's up?
Yeah, I was just saying, if you look at the 1 minute RSI or any of the RSIs, you look at the green bars and the red bars. I'm just wondering what the parameters are for that, because if it just breaches the green on the bottom or the red on the top or something, because I never picked up on that this thing was going to go up, and I'm just wondering what those parameters are that they use for the green bar and the red bar, like
Well, it's the
long or short.
yeah, no, it's the 188-200 to this blue bar. So the green bar is the 188-200, the red bar is the 261. And
On the actual indicator.
oh, on the RSI.
Yeah, on the RSI, see that? You have the green bar and the red. When it goes down, the red bar.
Oh yeah. Well, funny.
They were pretty much telling the truth there today, but they never picked up on this one, and I'm just wondering what the parameters are for that.
I think it's when it touches the extreme.
Yeah. Okay.
Yeah, I think it's when it's touching the extreme. Yeah, every time it's hitting the red bar, it seems to be hitting that. Every time it's hitting the green bars.
Not always though. It doesn't always go red though, eh?
Oh, is that right?
Yeah. Well, there's a few there that you passed that was supposed to be red, and
Here, yeah, it didn't make it through them, I guess.
nope.
Like, look at that. Like, in there. It did make.
See?
Oh no, it missed it. Technically.
Oh, okay.
Yeah,
Would be right and zoom. Yeah.
I can't help but notice the same kind of movement that we had when we were done. Same again.
That was the report. That's it right there. The FOMC minutes.
Well, they start talking about a previous report that they've done. I think it starts now. So like, it's very likely that they're just that there's not going to be anything more than what we would see technically. I think it's just going to return back to the middle, and that'll be the end of it by the end of it.
That was that Gab was all about, was those FOMC minutes.
Yeah, I think that it's kind of like an imbalance almost when we get the change of the hour there nowadays. We're looking pretty good at returning back to that middle there.
Yeah, and back to the VWAP.
Yep.
It spiked in my VWAP there.
Yeah, the people that are part of the big upwards push though, I fear they might get some sort of retracement in the future. And it might not be instant, but they might think, "Oh, you're getting away with it. You're getting away with it," and then come back and get you. Like that's normal. Good to make sure that it's made safe. Of course, I wouldn't expect anybody to have bought above the yellow line. I can take off these other ones, and we can just leave the bars in there, because we understand that that gray bar right there, that was like yesterday's, like right here, where we went out of this zone, which I could make blue as well. We left it, and we hit the green, we hit the red, we hit the gray, and we decided to come back to trade in between the green and the red. Could we do the same thing? No, I don't think so. Too steep. I think it just wants to get into the middle and stay there, if not get through it to get to the B points above it. But getting to the middle, it can come with complications for those that chased it. Once we've gotten to the middle, it can come back and get everyone that's chased it. And that could look like a retest of the other side of this gray bar. Testing it from the other side. And the VWAP can have part in that too. It's in this case, it's an anti-volatility VWAP. Anytime that we get involved with that VWAP, it only takes volatility away. Give it. But honestly, the way that I see this is that we're getting done with this VWAP. We're finishing like this is the grand finale right here. Essentially. We'll go back to the other chart. Look at how close we are to the middle level. Be there soon. It'll be nice and cozy right in the middle. And all the people that traded here or here are outside of the node. Anybody that traded in here is a person of the node. This is where the majority of the people are comfortable trading. Not a very good spot by the end of it all. And that was the story of today, is that, you know, it's in the middle in the long term. It wants to be in the middle by the end of it. And be a little difficult about it, but ultimately that's fine. I mean, after all, what's it doing for the people that are in the middle? It's not going to treat them very well. This is like a danger zone right here. This is where it all begins. And this spike that we saw out of the bottom of the green zone, that spike right there, don't be surprised if we see it out of the top of the red. Might be from. Because how much do we like to expand? Is it not true that today we have been expanding at every point of the day? Overnight's great for contracting. We get into a point of indecision for the open, or not for the open, but for the report, and you know it'll be coming back into tightness. You know, like yesterday, everything that was sold off past this point was bought up back to it as swiftly as it sold off from it. And that's like, okay, here we go again. But for the longest period of time, if people just simply land on their trades, unless they're trading towards the end of the day, I mean, the market has decided that all of that area that seemed so profitable is going to be eaten back up. But for the people of the day, if they decided to trade based off of this being a bearish move, they're going to be developing a position for the wrong direction. As the institutions want as many people to be bearish today as possible so they can buy you out. And that might seem like there's an opinion on the move. I don't care what direction it moves. I know the way to play it is to be long and to have it hedged. That's the best way to play it. Don't feel comfortable unless you have that position. Because if you're hedged, you're safe. You know, and if you can't put your stop loss in, like, you know, the institutions, do you think they have a stop loss from a position in 1965? Think they just have a huge fat $1 trillion sell order chilling? No, they don't. Hell no, they don't. They do not at all. They can't be as versatile as us because their position is so large. Their liquidity is so demanding. They need so much liquidity to be able to develop a position capable of moving their account. And yeah, we essentially, the bigger that you get, the less shares there are available for you to be able to develop your position. But the individual never has this issue. Like, you could trade 100 shares of NQ and get filled easily, but 100 shares of NQ is not a lot to somebody that has like over $100 billion.
One day, my friend. I saw Dark Star was in here yesterday. I didn't say hi. I was busy all day, but
Oh yeah, he just got settled at a new place. He says so.
yeah, I'm gonna see him Sunday.
Oh, there you go.
Oh man, I've got a crazy weekend. So I'm doing a live action murder mystery dinner. So I'm cooking for 20 and hosting a murder mystery game over
Oh,
the
that
weekend.
sounds fun.
Yeah. Sorry, Eddie. What?
Sorry, what'd you say?
I thought Randy said something. Over talk.
No, I just said cool. That's all.
Oh, right on. Yeah,
Yeah, sounds pretty entertaining actually.
it's the right kind of nerd stuff for me. So my first school was a culinary arts school, and then my pastime is storytelling and writing. So
Right on.
yeah, my second degree was in statistics, but yeah, cooking was first.
Yeah, ironically, my first broker, well, my family broker as well, they started in finance with a degree in statistics, which is interesting. Apparently, that's not normal, but she's now vice president of the company.
Well, there you go. Statistics degree takes you a long way. I just am not using it right because I'm lazy.
Yeah, math can uh, math can be tedious sometimes.
Well, and that's the attitude that earns that degree money. Is most people look at it and go, "I don't want to do it," and they don't realize that the computer's doing the math. Well, I'm just telling you what the answer means.
Yeah, yeah.
Although my one of my professors when I was in grad school, he and I started hand calculating a bunch of things for SPSS, is IBM's statistics software package, and we were hand calculating a bunch of things and found out one of their calculations, a base calculation, a t-test, was wrong. It was just wrong, and we showed them, and they didn't care.
Yeah, they're way beyond it, I suppose.
Yeah, they're like, who cares about your t-test? We don't do those. Students do those.
Yeah. We could be in what's gonna be wave 2 potentially. To a 5-wave move. Would be interesting.
I don't understand what that means
Oh, okay.
necessarily.
So a 5-wave move, we like to get you know, I'm referring to basically an impulse wave, and that's Elliott wave analysis, and it's basically 5-wave move will look like this, where we have, you know, the first wave and the fifth wave are relatively similar. The second wave and the fourth wave are relatively similar. The third wave is actually the largest wave, and it's common for it to create a three-wave move against it when it's finished, and that's how many people can end up with a head and shoulders pattern. And of course, it can happen in reverse, and it can happen in different ways as well. Like the movement that we saw at the beginning of the day was a variant of this movement, and essentially what it can do is make that same 1, 2, 3, 4, and 5, except it can make a third drive on the high and then come down. And it's a completely different pattern because it has that third drive at the high. But you can see how effective it can be. And I posted it after I mentioned it in the call, but basically it was like this, and you can see that for that.
Oh, I see it. So you
Yeah.
said something was going to precede the five-way move. You said two-way or something. I don't know.
Yeah, so basically a three-wave move can come after the five-wave move, and that is
And I just realized because I'm learning everything. You're saying wave, WAVE, and not way, WAY.
yeah, wave, yeah. So it's Elliott wave. So basically like, we call each movement like a wave, and it's like wave 1, wave 2, wave 3, wave 4, wave 5, and they're technically like their own trends. The first wave has to break down in order to get to the second one. The second one has to break up in order to get the third one, so on and so forth. And a trend has to break in order to get another wave to form each time, even if it's just a small one. And the thing is the waves have similarities. The third wave is the only one that really stands out as its own. But the second wave is really similar to the fourth, and the first can be really similar to the fifth. And the market, it would seem like it does a terrible job at trying to do this regularly. And then all of a sudden, after doing it really terribly, you'll find that it can do it really well, and that doesn't last long. It's like it'll pull it out and like it'll make it perfect like this one was over here, and it's like it'll be long before we see that again. It's just seems to be the way of the current environment. But it's not. It could change to getting it all the time, of course. But right now, I'm like, what they've shown work in the past becomes the next most dangerous thing in the future, because it's like people think that they can, you know, repeat the same thing over and over again and get the same result. But when the market shows you the same thing over and over again and gives you a different result, it leaves people scratching their heads. And
Right. And I think that's always been like the big thing of how do you master the market. And that was John Nash's big deal about the zero
mhm,
sum game. And how do you predict this thing that is sort of like a living entity, that the wants and desires of every individual make one thing happen on this graph, which is up or down. And
mhm.
so taking the mass desires or whatever of the populace isn't really optimal. So you have to rely on previous things, and he goes into this whole thing. And so he's saying what you're saying.
Yeah,
He's
and
saying what
it,
you're saying.
yeah, and it's interesting because like that you mentioned it really really interestingly when you say that he considers every single individual. And the game's changed now. Like Wyckoff used to consider every individual too. Everybody was always like, the price of the share is only what people are willing to pay for it. Now it's what the institution's willing to pay for it. People don't even matter. They only matter when the news comes out. The news comes out and they matter because they provide liquidity. They push the market in the direction that you've acquired that liquidity by losing money in the wrong direction. And and then there's all the people that just funnel money into mutual funds every day, mindlessly, and they just get to play with that all day long. And it's interesting how far off and how incognito active management trading is for the individual. It just doesn't it's not the first thing that you'll come across. Like if you type in active management hedge fund, they won't give you active management hedge funds. They'll give you mutual funds. They'll be like
Well,
you can
that's
buy any one of these actively managed funds. And I'm like, "Ew,
it's
disgusting."
That's where I'm at. It's exactly right. Like I need to learn this if I want to actively manage any amount of things. Otherwise, I'm buying into, Vanguard or something, or and that's great and all, but come on. I want to see what's happening. It doesn't need to be this big blob that is
Yeah,
a
you want to
machine
be
learning.
accountable for it, and when it goes well, you want to say it's because of what you've done and your understanding, and that's respectable. Really, it is, in my opinion. And it's like, it's not like, it's not, it's not like you're piggybacking on somebody else's understanding, but you're going for it yourself and taking the control into your own hands. Because when you give it to them, they have the control. You know, they're like, don't worry about it. Just keep putting a regular amount of money away, and you know, when you die, we'll figure it out. And I'm like, what? I'm like, that doesn't make any sense. I'm like, this is no good for anybody but Vanguard.
Right, because legitimately, why am I doing it if I'm not going to spend the money eventually?
Exactly.
I have fun in life, but I'm not done having fun. So
Yeah, exactly. And it's like, you know, it's always really like I was always like really, you know, fearful of taking money out of the first broker that I was ever with, until I literally was sitting there for like a couple of years, and I was like, I was literally like I saw the developing marijuana industry and stuff like that in Canada, and I was like, I can't do this with them. I had to change it, and I had to learn in order to do that, because it was like they keep you in this idea of that you need them, and that they're useful. And it's like, at the end of the day, if they provide consistent, usable information that can allow you to position yourself accordingly in the market, that's useful. I like to think that's what I provide here on a daily basis. Like, not something that's like, okay, last month, you know, if you go back to 7 months ago and try that stuff in this environment, it may not work, but it's what was appropriate for that environment. And as the market changes, I think exactly, you know, changing with the market and understanding when it's supposed to be slow, we got to be hands off. When it's supposed to be, you know, when we're supposed to be fighting for a target, then it's worth more. You know, when we know, like today, it's like everybody's fighting for the middle. I mean, like, if you want the middle that bad, then go nuts. You know, it's what we're getting here. But at the end of the day, there's nothing better to do than to be fighting for the middle. At the end of the day, that's where it is. It's going to end up there. Well, it's basically in the green zone right now, just below the middle of the beginning range. Like, we've come back to the B point, and we're basically knocking on the door of the entire giant node that we have here. So at the end of the day, you know, that's a spot to really make sure that you're safe if you do have it. But yeah,
so are we expecting sort of like you've drawn this picture before where you draw a triangle with a point down and then a circle next to it and then a triangle with a point up? It's sort of
yeah.
like this double move after consolidation. Is that getting ready to happen here?
Well,
What do we?
I do see that that has happened earlier. Like the whole day started with that move. Literally, it was like this move here, and then it had the circle, and then it did the spike, and it was relatively the same uh, distance away. Like, it was really good, and we saw it a couple more times after that. You could say that it almost happened in reverse here, but it didn't quite make it all the way back to the baseline of that first triangle. But I mean, it certainly tried. And other times you could say it even tried in here, you could say, if you're pushing it. But it's been a really common pattern, and it is something that's really valid to look for, because when it is equal, you know, we could see, you know, it really tries to enforce change. And if that equality on both sides can run into something that's otherwise a strong barrier at the same time that it's making it equal, it becomes kind of attractive for at least some sort of jab against it. They can be like, all right, let's say for instance, if we made that move right there, and I'm like, um, we spike at the bottom, and then we make a consolidation, and then we spike out of the top, and we hit this high, right? That's outside of this node right here. I'm like, that high is very likely to bring it back to the node, and I'm like, what is that? 10 points, and that's enough for me to be able to take profit on a juicy hedge. So I'm like, that starts to become an attractive plan. But if we do it in a way that I don't like, then it's no good. But honestly, the next when we get up there, if we hit that level without making any other retracements before it, it might only make the fourth wave. Because like that's what it's supposed to do. If this is 1, 2, 3, 4 is just the same as second usually, and then 5 can actually get us through it. Where, you know, ironically, 1, 2, 3, 4, 5 can get us all the way up here, and then it could crash right back down and end up in the middle. Just like, it loves the middle. I don't see it getting away from it anytime soon. If it does, then that's fine. But ultimately, I'm bullish. I just think that it's being tough on everyone, and that's absolutely fine. It's normal. Um,
Okay, I see how that 5 wave can start with that. What do you even call the little triangle circle thingy?
Well, I made that, so I'm not. It doesn't really have a name. It's just I call it a spike out of the bottom and a spike out of the top of a consolidation, but or a triangle and a circle. Yeah, yeah. It's basically like a spike down and then a consolidation with the same spike out of the other side. That's how I reference it because like it
Well,
gets
it
the
makes
picture
sense
across.
because I see it over and over. I mean, as I
Yeah,
looked at
yeah.
it, I was like, oh, I see this happen on a yearly chart for sure.
Oh yeah, yeah, all of it you'll see happen. That's what I was going over earlier. I was like, if you watch the short term on a regular basis, you'll start to notice things on the long term. And if you've seen them 10 times on the 1 minute, you might not just be familiar with one way that they can play out, and you might find some similarities to a certain way that likes to work. And if you find that on the daily, that can mean okay, I see that on the daily. Now I'm going to fight in the short term to get exposure in that direction, and I'll trade every 11 high zone or 11 low zone until I capture the exposure that I want and hold it to that long-term target. And that's the market likes that right now. You know, it's not always going to like that because it will change, but right now it's good to go for that kind of movement. I can see the market really respects people that hedge too, because they expect you to keep your stop right at the beginning of the move. When they come all the way back down, they don't want you buying on the retracement. They want you to be taking profit on your hedge. And everybody else starts buying when it comes all the way back down to a level like this and goes like that. Everybody else starts buying when it's here because they want more of this. And yeah, sometimes it's really tough on them. It reminds me of this move again, and the people from yesterday that know about holding, people that and everybody else that's still holding, they're just laughing. They're like, look at the show. Everybody wants the long trade that we have for a continuation, and look what they had to go through. The people that held it didn't. All they had to do was hedge it. And I'm like, well, the understanding is what makes the difficulty go away. You know, if we understand that everything amounts to it being difficult and coming back to the middle, I mean, you can see who's moving it there, and it ain't the people. The people have long quit out of this consolidation because it was too tough for them. You know, it's very, 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 very common. And I'm like, you know, it should motivate you when it's not tough for you, you know, because you can see how tough it has been. It might have even been tough for you, but because it was tough and you stuck through it, now you have something to feel good about, you know, and that's very rare because most things that you feel good about end up end up making irrational judgment. But the one thing I think is really good to feel good about is that you've completed your task and that it's done exactly what you wanted it to do, and that you took it from where you wanted it to where you wanted it. You've made it safe, and you've done it the right way. And I mean, like, yeah, sure, that's good. You know, the market's respected the actions that you've taken. And the red yellow line is clear. There's only one of them. So, you know, trading towards the exposure to the red yellow line has been the name of the game. Anybody that was positioned short for the day today, they're squirming in their seats. And if it was a hedge, you know, that's the best way to go about it, because you're like, oh, finally, my long trade is going again. You know, this big environment that was so scary and that was full of the entire day is just instantly bought back up, and everybody was wrong about it. And I was like, oh yeah, 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 so quickly too. It's like the elevator back up all of a sudden. Jeez. Get ready for my fourth wave.
Right. That's so. Now you had made a comment that okay, so we're going to clear the volume, which are the numbers on the side or whatever. I'm learning here. That you expected to come back down towards the majority of where the volume is. Why is that? It's happening, but why is that?
Yeah, no, that is because everything through that high was like wicks and spikes, and everything past it has basically become a barrier that we can now step on top of.
Oh, to get the other wave going.
Yeah, yeah, no, it's just a really appropriate spot for it to try and make this kind of movement uh in here. And I mean, you know, sometimes I've noticed lately is it's kind of cheeky about it. It'll go up halfway and be like, "Oh yeah, we're doing it," and then finish it and then actually start making the move. I'm like, "Yeah, the people that first started it, they just put in a really sour position." And I mean, like, experiencing that is tough, but if you understand that people are put into that position before it actually makes the consolidation, I mean, it looks like it was so easy to make here before, and it only does everything differently the next time that it's in the appropriate area to do the same thing. I'm like, that's interesting to me, you know. And on the other chart, take a look. Let's take a look at the other indexes too. A little bit more than this, perhaps. No, actually, it's the same thing. You know, I'm lenient with it. It's pretty much the same thing.
Right. Well, again, it comes back to we're trying to find a pattern here, but I'm still trying to figure out what starts a pattern. Where does it, where do you begin reckoning that the 5 waves happening
Oh,
versus this is just
yeah, the trend break. So when the trend broke, everything started. Because everything came to an end contained within that trend at the time that that trend was broken mathematically. And at that time, a new trend has formed, and since that new trend, this has been the way. That's the way I look at it.
okay, okay, I can handle that.
Yeah. It's pretty straightforward. And it's like we have a new trend now, and this is like the center of attention and focus. Like my focus area, I know there's a lot of on the chart, but like my I'm only ever looking at one thing. I can't move my eyes to look at more than one thing at a time, so I'm only ever looking at, you know, here, and then I look back and I see the trend. I look down the trend, I see these other ranges up top, and I look at them, and I look at the different lows. But at any given time, I'm only ever focusing on one thing. And right now the trend is that major thing, understanding that we're, you know, in that area. And these are the B points that are literally forming. Like we can see that there's like little untested levels here, which I'll make
261 there. This is coming off of 261 to that viewpoint.
to this B point. Yeah, okay, let's take a look
Yeah.
at that's crazy. That's a 261. Or is this a different let me look at this one.
Got you all sideways talking to me.
Yeah.
See, it almost got you there, eh?
Okay. Almost, yeah.
Yeah, but it hit my purple line on my VWAP too. So it's, playing within the parameters.
Mm-hmm. Okay, another thing I noticed as well is that 188 of that fib set is like completely disregarded. I think we're gonna want to see that again. And why is because at that point, you know, it's already shown that it's comfortable at that level, and everything past the VWAP has essentially been retraced. Hence the chaser retracer and the enforcement of I love the middle kind of thing is happening right now. And we, you know, the one thing that I would say is do not let it be because it returns to the middle that it costs you money. You know, like that is one thing. The middle is one thing that it likes to see. You know, back at the trading floor, what they used to call the traders that I work with was discretionary reversion to the mean trading. Like that's what it is. It's a reversion to the mean trading, but it changes what brings back to the mean regularly, and you have to be you have to understand those changes regularly, and now there's only getting more changes with more volatility. So it's like for a new person, it's like you have to understand how many changes there can be, and then as it changes quicker, it will show you what you're interested in potentially more often because it changes so often. So if you only know one or two different patterns, you might see them more regularly. Yet when you trade patterns, it's more likely that you have to take on greater risk uh, because there's bigger moves than there used to be. So it's like you have to find more comfortability before you take action is where what I get out of that. As I'm like, okay, it really makes sense that we have to be very careful and it has to be very clear about what it's going to do before you position yourself for that move. Because it's like I think it really helps to imagine that you have to explain yourself to yourself in the future. You know, I think about that where I'm like, okay, you know, your future self, which is better off you'd like to think than your current self and more, you know, wise and knowing. an understanding of your future, you'd have to then explain to them that would be otherwise upset with you not being able to complete a task that is obvious. So you could look at it like you have a boss and they're really angry and you don't want to have to deal with them. They're going to ask you to explain yourself for what you've done, and if you can't, then you don't want to have to deal with that again. So you're only going to do things that you can explain because you don't want to have to deal with that future uh, burden of dealing with that person or whatever. And I mean that could be reality. Like it's the case. So you want to be careful with you know taking those screw it trades, like they have, or anything like, or YOLO trades like they call them. Yeah. You never hear me talk about stuff like that, buying lottery tickets or whatnot. Not not it makes me sick, right?
$1 billion isn't a bad investment.
What's that?
Oh no, I was making a joke. I said paying $2 for a chance to win $1 billion isn't that bad.
Yeah,
All you
it's
see is
bad.
laugh. It's not a true thing.
Yeah, I'm pretty anti-gambling for sure.
I like gambling. As far as like cards go, I can't play Friends. I really don't like playing Friends. But when I go to Vegas or St. Louis or whatever, I'll go find a card game or a dice game, and
Yeah.
those are pretty much, yeah, it's fine.
Yeah, I mean, yeah, it's like
And
I've played like, it's always very minimal if I do. It's nothing, I'll never risk any kind of serious
if
money
I
on gambling.
no, I go in with like $100 or $200 at most.
Yeah,
But
exactly.
it's like
If
the
I was being
statistics
dragged there,
of
I would do the same thing. So you're saying the statistics of I think you might be muted or something. Outside that, we are at the POC. This is the area that has had the highest amount of trading, entire range that's visible on this current screen. And I mean, we came back to pay respects to the VWAP, and that's a VWAP that this one is more recent than any. My other chart actually has two VWAPs, and one of them is here as well, a little bit higher than the other. That's fine. I did put a white dash line in there too, because that is a level that, ironically, I think that everything is being bought back up to that level. But we are above that level, so it's not doing too much good right now. We did come back to step on it, I do recognize that. And we made a lunge to try and come back at that 188 200. I mean, it's trying to do that right now. It's not a very significant move, but a little bit clearer on this chart here. But yeah, the middle, where it is. Oh yeah, imbalance as well. It's coming up. It's not incredibly far away, so we're go ahead and mark that just so we know. If there's a left shoulder and a head, can we fit the right shoulder in before the imbalance kind of thing? Or is there not enough time, or is it going to be associated with the imbalance kind of idea? It doesn't really have to. It doesn't want to. It's not something that should compel you to trade closer to it, but rather protect yourself, and become more defensive as we continue to get closer to that time, because that's what it is. It's a time. And it's not any particular level, but at that time we will have a report that comes out, and it can increase volatility and potentially break trends.
Yeah, the 1 minute hit the 15 on the RSI and is now still continuing to go up. Use it as a sort of resistance level.
What about that long-term one? I bet you we've seen some action from the.
Oh yeah,
Oh,
well,
okay.
yeah.
Did it come back to test the other line? Let's see. Oh yeah, totally it did. It changed everything.
Yeah.
That
Yep.
changed more than I would usually think it would, actually, too. Usually, it would take a bit more. Yeah, see the 12-hour, it was like creeping down before and it looked like it was about to cross, and now it doesn't even look like that ever happened. That's really strange about that. Or maybe I was thinking of a different one? Was it the 4-hour? 4-hour is crossing. That's still crossing.
I mean, the 4 hours right in the middle. It could basically go up and touch that blue line, or it could go down and hit the green. I mean, it's basically in the middle.
So on the 4-hour, the blue line is the short-term line.
Oh, that's the long-term line.
Or long-term line. Yeah, that's right. That's right. That's
Yeah,
right.
yeah. It's always a long-term
Backwards.
line,
Well, unless you look at the 1 minute, no?
yeah, that's right.
Yeah, yeah. So there was anything below the 15 minute is what it is, right? I think. Yeah, yeah, that's what it is. Yeah. But then we had yeah, that 15 minute. Let me look at the 15. It's been in the middle all day. For every time I look at it, it's in the middle. But it didn't. It must have gotten away at some point because it's made a it's made an effort at that similar kind of move that we see on the market where it has that like spike into a circle with a spike again, the opposite direction. And like the thing that I want to show about that is the fact that making this move, you know, it always creates a trend. You know, like in this case, this will always be able to be drawn. Like you have a channel. You know, when you do this, it's exactly in reverse. You can draw like a channel, a trend. And, you know, of course we could see that happen again and again, but so on and so forth. And this is like funny enough, like I noticed this in head and shoulders to inverse head and shoulders. It's actually just got one more circle because that into that is a head and shoulders to inverse head and shoulders. But basically, I noticed that there's components in a head and shoulders to inverse head and shoulders that we need to basically acknowledge first in the day, it would seem, and that's, you know, the spike on the top and the spike on the bottom of a range. And it just so happens to be formed like this, and when it finishes, it can be done. And that's the thing that I like about it, is because who wants it to stay at that shoulder level, right? That's terrible, but it does it. So you know, it's one of those things where we can either accept it or neglect it kind of thing, but it gives us a time that we could pay attention for the consolidation to end. And I think that one thing that was very clear about the fib channels today is that the usage of that medium bar transferred over onto the usage of the green, and it was very grindy and very, you know, tough to find exposure on it, and it did that environment twice before the reversal, where it's like anybody that was trying to buy from here, here, they're all right. This was tough for them. Somebody wanted you to try here so they could buy your shares here. Somebody wanted you to try here so they could steal them and buy them here. Somebody wanted you to try here so they could steal your shares and buy them even farther down. Because it's like if you think it's good here, your stop's down here maybe. And that's what's juicy to the institutions, not where you bought it, but where you have your stop.
Is there a general distance to create a stop that maybe an institution takes advantage of that knowledge? Like, it seems like a thing, you know, everybody would hedge 10% or something. And the institution, knowing that, would go, okay, we need to drive the price to this point in order to beat that. Is that a thing, or am I just
Well,
imagining?
no. They can see exactly where everyone puts their stops in the order flow. Basically, they can look at level 2 and see how many orders are stacking up at each price level. And when they see a huge clump,
Yeah, I imagine.
they'll clump. They see a huge clump and then they gravitate towards that clump and stop them out. And basically, that huge clump of open orders where all these people have, you know, basically they've bought it here, right? And then they put a sell order right here. So that means they're putting it up for sale right there, even lower. And if they just go clump and then they're like, we got all the liquidity we need, Captain, and then it reverses from here. And then that's it. they provide liquidity. Everybody that bought in here, this entire node kind of thing, like you can see this entire node that was in here, they may have had stops just below the range, and all of that volume just gets accumulated. The fact that it's not the same size makes me think that it goes off of the regular exchange and onto a dark pool, which is not visible to the public, as they don't want you to know where they're making their orders. They'll show you what they want though. They can put orders where they want. It's called spoofing. It's illegal. They do it anyways. And
Legality doesn't stop a lot of people.
exactly, especially in finance when
Well, because then you got to get caught, and then somebody's got to make the argument in court, and if it's not exactly what you did, then
how do you say that? Yeah, how would you know that they had the intention of moving the market unless you knew how they traded and they knew that that their orders would have a certain impact when they made them? But the people that are doing the catching, why wouldn't they join the team if they knew how they traded? But they can't. They just can't figure it out themselves, or they'd be trading themselves. Instead, they're working for the government. And they're easily paid off by the people with billions of dollars to stop looking. So it's yeah, it's tough. I think more people should look into dark pools and more people should have a problem with them, but nobody knows what to fight against and how these really, really big organizations are making a lot of money off of other exchanges.
I don't even know what a dark pool is, to be honest, so I wouldn't even know how to look for it.
Yeah, like
I'm just a regular guy.
yeah, back in the day when I traded on the firm, they were basically there's options to trade on EdgeX, Amex, NYSE, BATS, and like a couple other ones as well. But they would have your options to trade on different exchanges, and essentially there was one that was just plus sign, plus sign, plus sign, plus sign. And literally, I'll never forget the first time that I ever got filled at a point where the price had never reached. So it basically jabbed somebody out and filled my order on it was a SQQQ trade, and basically it was coming down and I was trying to buy it, and I had orders to buy some at the bottom and it never actually got there, but I got filled, and the candle was outside of or my indication where my position was outside of the entire range, and that's what was crazy about that. And they basically tell you to set it to aggressive order flow entry, and it basically you can basically push orders out there and they get filled faster, and it's a lot nicer when it doesn't show up as well as orders for other people. So, and it shows up to the people that have the ability to see the dark pools, but naturally they're positioning differently.
That's crazy.
Yep. Yeah, it's crazy.
I'm
And they
thinking of a name
Mhm.
for your pattern of a bow tie.
Oh, the bow tie is something else. I'll show you. So the bow tie is when you get it's a symmetrical triangle into an expanding wedge, and it has that kind of look to it. We get that sometimes. I mean, it happened not too long
I've
ago.
seen that for months. Really?
But yeah, well, I think you were gone when you saw it, when we saw it.
Okay.
But
Okay.
it
Camping or something. Yeah.
yeah.
Another option I had was like a toffee, like one of those caramel toffees.
I don't think I've they packaged like that or something.
Name, though.
I can't think of what that is. Are they like packaged like that or something? Because
those individually wrapped, and you get them in a bag.
yeah,
Toffee, hard candy.
like that. Interesting. Well,
Hilarious. Candy, baby.
yeah, because effectively it's doing that right now as well. It managed to pull that off, before continuing. I mean, it is. It's
Did it make it back down to the last high?
yeah. It came down to test that. Oh.
I never looked at them like candy before. That's different. It's cool though.
Yeah, why not? At the end of the day, another one that's very similar as well is we saw it earlier today where we had a channel and it had a move out of the bottom and a move out of the top, and you can kind of see that, you know, we're progressing out of this area in a very similar way to what we did before. It's almost like strange how similar this move it was to this move, and they divide this channel and bring it back to the middle like that. So it's like that's all it's trying to do. And I'm like, oh yeah, you know, when we were talking about other ones today, I was like, this is how we actually can do it as well. We can make 3 highs into 3 lows, which I think they're going to start to mess with this soon. But ultimately, it's like it it tries to end, well, I guess you could start it a little bit lower, but it tries to end roughly right where it started. It does the thing that worked on the top to get it down, and the same thing in reverse to get it back to where it started. And, you know, might not get all the way, you know, sometimes because there's something in the way or something like that, but it did start from here, you know, that's the trend break. And it did manage to come back to there, but it wasn't half of the entire pattern. But sometimes it will be, you know, it's straight up. You know, it's like not always is it going to do that for sure. In fact, it's probably not going to do that again for a while. It might do it properly the next time and make it the 50% that's in the middle. Like, because we've seen that a lot lately. Like it is true that many of these spikes they do end up right at the 50%. There is like a 50%, and sometimes that they might start the baseline at different levels. Like the baseline of this spike started there, but you could say easily that the one started here, you know, and that it had a completely different kind of starting point, and this is in the middle. And there is another way you can look at that too, like it's like it reminds me of an AB equals CD pattern. Like it's like there's many different ways to really go over these. AB equals CD pattern. So you go like this: AB, and then C, and then D. So what we could do is see the distance between A and B. We go ahead and just take that. Is that the distance of the next move? I mean, splitting hairs, yeah, it pretty much did a really good job at trying to duplicate that move again. And you know, we could go ahead and see exactly how much it did by using this Fibonacci extensions. We go click once. Okay, so you start off, you click at the very bottom, and then the B point, and then here the C point, and you can see the 100% is actually exactly this move here. So it tells us how much we've extended beyond the pullback. And getting exactly that same move would get us to the 100 always. And you can see in this case it was to a 113, which is not a fib I usually use, but it is used there. And it's used on that weird pattern. But I mean, is it not happening here as well? Is that different? It is different. It's totally different. In fact, it did its own way of making a 5-wave move. Now, not every 5-wave move has to end with a new high. There's actually one that can be what they call truncated, where it's cut off at the high, and the head or the end or the 5th wave doesn't actually exceed the high. And it's truncated, and if you Google truncated, it just means cut off. But it's like in 1930s terminology that nobody. But essentially, that is what the guy came from the 1930s, and wow.
So that's what happens, right? Oh, this thing that I was trying to predict the move, it didn't happen, so I got to rename it.
Yeah. Well, it happens. It's technically when it is doing this, it's doing that pattern rather than the other one. And sometimes there's things that can suggest its reasoning for being cut off. Like we're extending this node a little bit to the high, and it also comes to mind that it could be a fake out. It's like, oh, everybody, it's actually starting right now. You better get in, and then boom, it makes the 5th wave. That would be like that would be, you know, pretty it would be harsh, but I mean the market in the way that it's been today, it's been, you know, I think it's trying to get people to short it so it can screw them out of it personally. That's what I think it's doing. Just so like it was trying to screw people out of the long trade that was clearly right, but they found that perfect moment when nobody was paying attention to move it away and get everybody that was trying to buy since it was down, since it ever dumped, unless you started buying it like as soon as it started dumping off above the range and everything, which I mean nobody really was. You can see there's no volume in there really. So you know that everybody really started buying in this big chunk and continued to buy down here, but most of them became part of the institution's position rather than a position that they kept to this point. That's the irony of it. And it's tough and hard, but that's okay. At the end of the day, if you recognize that today it was a very centralized day in the middle, and if that is a deterrent, then it's not good enough. Like I said, I said at the beginning of the day, it's good to be picky. And when I say it's in the middle, that's something that's like it's like no, I don't, that's like, oh, so how are you going to explain later to the person that holds you accountable that you traded in the middle, and when things go wrong, and you find that you look back, well, look here, you traded in the middle on the hourly, and it's like, well, that's why it didn't go well. And I'm like, well, you found that it was good enough for you though to trade in the middle. And I'm like, well, that's terrible, that's so hard on me. I'm like, geez. So it's like it's true though, that the institutions, how do you think they're gonna, like, if somebody made a mistake or something like that, they're gonna hear about it 100%, they're gonna fix it 100% and be held accountable for it until it's fixed. And you should do it for yourself too. Be very hard on yourself to make sure that you get it right. And like in this case, everybody thought it was going to go down, right? And it's a controversial 188 area. Everybody's getting stopped out right now. It's a very, very slow, grindy process, but they're trying to make it go quick again on people's stops. Now we have to watch for increase of volume as it gets through this high, because they're making it slow because people are trying to give it another minute, give it another minute. Oh, maybe I can handle it going into a fifth wave, and then it just doesn't stop. That's what they're trying to get people to do. And if they can get enough of them to be putting their stops in this area that's got no volume, it makes me think they want to make it even on both sides. What if they put this spike on the high like they had it on the bottom? Because we're in the middle and that was here, and if we put it on the top, that would get the middle volume there. It's a terrible trade to take from the middle, but a lot of people will be taking it back down, and I fear for them pretty much. So that's the current situation. It's not being very nice, right? So it's it's good to be aware of these situations. So like even if you're not taking the trades or you're not involved in it, it's really good to understand the environment, because like this environment is brutal for more people than it's good for. Where the public think that it's always an even scale. They don't think that there's this large entity that's taking out of the public's money no matter what. And it's like, I just think, where do the institutions get their money from if it's not the public? Yeah, sometimes a shark will eat a shark out there, but they're usually easier off going for the seals, right? So at the end of the day, it's same in this. Just as a lot of other things are similar. And after a day like today, I think it actually will be significantly more pattern oriented. I think we'll see more 61s in the morning, but the people of the morning today will think twice about taking a 61 tomorrow, right? Because they didn't, it's like none of them worked. I don't even know how many failed. As many worked yesterday as they had failed today. This is just about. It's like until that trend that was down, that was otherwise really, really hard to get exposure to, broke, then they started seeing 61s again. But that was intriguing. And it got really close to that 261, and now we're like fighting it again, which is, it's hard for it to be outside of that node. But you can see that's the battle right now. It's really controversial because we get through that red yellow line, the entire downtrend breaks. And I didn't put it on the very tippy top because look at the volume up there. It's absolutely trash on that high. That third drive, very, very small volume. I think that it's just like noise above the actual trend. And this one is placed at a more appropriate angle, suggesting that it could break and get retested in conjunction with the node. And that could look like a spike out of the top and the bottom of the node. And I mean, that's what we like to do. Because think about it. When we make a node, you know, and it goes, oh, sorry, makes the node, because it chops to make the node. You can't make a node unless you spend time at a level, unless you put volume there. And if we come from a downwards move that's oh so clear like that, and you know we're making a move like this, you know, we do have to consider this. And sometimes it even looks like that. You know, can we make this move out of it? Totally. W into an M. It all centralizes around an equilibrium. So we see that all the time. You know, sometimes the M's and the W's are a little bit funky looking as well. But yeah, this is a 5-wave move. It's a monstrosity though, I would say. Like 100%. It's not. You go into Elliott Waves textbooks, you won't find one that looks like this.
What's the time on those choppy areas there? How long are those little choppy areas?
Like these ones or these ones?
Yeah, no. Yeah, the first top.
The first ones, they are 20 minutes. And I see that a lot, that first area. I think that it sets a good time barrier too. I do like the idea of checking that time. This one's a little bit more, but you could see at that controversial time, things started to kick up, the trend started to break. But we've seen that.
Well, if you put that at the lowest or the lowest low here on this new trend, I think we're at, as it's spiking down now, we're at that same time, right?
On the lowest low, like
Yeah, yeah, you just did it. I think it's about the same amount of time if you, uh, I don't know. It's just the
up
way
to
I'm
here.
looking at it. I'm sorry.
Oh no, that's
Yeah,
fine. I didn't
yeah,
intend to
because
bring that one
we're
over,
seeing.
but it is intriguing. Because I'm like, you know, this middle VWAP area, like I can't help but think, like, is there any sign or signal that it's trying to do a botched version of this? Because I mean, we've we've come from that, and you know, if I look at even this, there's a triangle on one side and a triangle on the other. I can take, whoops, take that off, and we have that. Yeah, things are changing at that time. I like that. There is an ability to find a there is a tool to find a time significance. I don't use it often, but I have used it, and it has calculated very suspicious times.
Oh, you can do Fibonacci's on time. Weird.
Yeah,
That's
you
neat
can.
stuff.
Can.
That would show you how they can change over time. So it's interesting you bring up noise. There's some noise today. Do you know anything? I mean, even base about like Fourier wave transforms. You know, how a wave changes to noise, and then you can focus out the noise, and you get a clearer wave signal. It's just interesting thought that it ran through my mind.
Oh no, that is interesting though. I
It's sort of a communications thing.
yeah, no, that's interesting. I didn't think about that. Yeah, yeah.
But you know, if things are looking funny and you're talking about noise, well, what's the noise doing to what you're predicting in a way?
Yeah, you know what I thought of before is if you could program the market to make a like a noise based off of volume or even heavy movement, so that the volume would start humming higher when there was heavier movement, and it could make a noise that uh, you know, would mean heavier volume as well, and it could change its pitch and tone, and you'd understand that at times that it was making heavier movement, it would be a different noise, and I wouldn't be surprised if in the future the market did actually make a noise, or it was an indicator. It may already exist, not sure, but no, highly doubt it. But it would have nothing to do with direction, just the speed and volatility, the rate of change, because as it's moving faster, you know, you could become attracted to environments that are otherwise similar in the amount of noise that it's making to, and deterred from slower, lower volatility areas like overnight, it wouldn't be loud at all.
So yeah, the Fourier wave transforms. You can
I'll
kind of
check that
think of
out.
it like, yeah. So on an AM wave frequency, you get static in the wave. Some AM receivers can transform that wave back to the static free signal by taking out known uh, static elements, like this signal's intruding or something. It's just weird stuff.
Hmm.
But it's a known science, and it's something I've read a little bit about. But I just found it interesting. The stock market at this level is I don't know. I'm trying to just understand it more, so I've got to rely on things that I know a little bit about already.
Yeah. We're about touching that red yellow line now.
You liked that? Oh man, you talked about that earlier. It was going to happen. Here we go.
Where does that red yellow line? Where does that come from, John? Because you
That
didn't.
should be today. I didn't connect it to the very, very high. I connected it to the 1102 high. And
Okay.
because if I put it on this high, it will put the trend up here. Which, I mean, that volume still is relevant, but I mean, I think that breaking out of this node is going to involve that red yellow line. And if it took a little bit more time, it would actually be a little better. Like if we could break it from here, it would make a lot more sense. But that's okay if we don't. If we don't, you want to know, it becomes an ultimatum. Then we test it from the other side. Because if we do things early, then it costs the retest. If we do things properly, we may not have to retest. It's not a matter of black and white, but a matter of, if we've made it difficult enough, it doesn't even need a retest. There's no chasers because we all eliminated them in this environment here. We didn't want to give them an opportunity to get in when we just spent time getting rid of them, right? So it's like it's very much like that, and I see it like that there, and they ended it with the cherry on the top for it to be really slow. So anybody that was trying and trying and trying, that's the nail in the coffin for a lot of people. They found that window to thread the needle in that area, like I say. It reminds me of like, what's up?
No, I just found it interesting that you had it cross over the second high, which wasn't even at a major fib, but you used the second high on that on the second drive.
Yeah. Yeah, like I look at this moment where they try to find this area where the people aren't looking, like this. Somebody's flying through that little gap right there. That's basically what that's like. They're
Nice.
trying to find that. That's what I mean when I say threading the needle. Yeah, like this. Like this one. I don't know how well that's going to work though, but I'm sure he's fine.
Nature knows, right?
And I mean, the one thing that was kind of coming to mind as well is the idea that we've started with this and have went through this and we've not seen this yet. This is another like equally agreeable monstrosity. Like it compared to what the technical analysis has been for years, this shouldn't. I mean, it hasn't really been common, to say the least. Because it's really controversial at the end of the day. It's one pattern that creates the same pattern in reverse to what just formed. And I've seen these patterns happen 2 times in a row. Just to make this the way that it literally does the S wave. It's just terrible when it does that. But at the end of the day, it's going to be confusing for a lot of people that are used to it making a head and shoulders and an inverse. It's like, which one do you go for? There's like 6 of them happening in one S wave, and kind of, or at least 4 of them, sorry. Ultimately just to end up right back where it started typically. All of these problems that are set out for people just amount to them becoming volume and it ending up right back where it started. It's interesting. And I can't help but notice how we're treating the 188, a level that's otherwise, been formidable for resistance and so on. But they get everybody to short it. And anybody that's shorted it has just been like, okay, a new high, 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 and whoa. That's brutal. It's brutal, man. That's what they do. And it reminds, like, the low is exactly the same way. New low, new low, new low, new low, continuously. And that's the price of capturing a trend break just to get to the middle. That's what it wants to do right now. It likes the middle idea. And I wouldn't be surprised for it to find the middle of another move by the end of the day, with it all ending with the break of the red yellow line. Because now, for the people that didn't have the red yellow line, they'll have it because it just made it. If it wasn't found important, then it is now, because that's the line that it chose. And in order to get to any other line that's more important, like this one up here, because I mean, like, hey, I'll tell you, it's more important because we're still in a downtrend, even if we break this line, because we'll still be in this one. I mean, that's a downtrend and we're under it, and until it breaks, we are technically in a downtrend. But it doesn't mean that we have to be going down while we're underneath that downtrend, because we could go up to that downtrend and break it and go up. And for that period that we're inside that downtrend, we're not going down at all. We're actually moving against it. And that's one thing that, just understanding if we're in a downtrend isn't good enough. It's like, are we reversing the downtrend though? You'd have to lead with, because just knowing that we're in a downtrend, what is it? Are we in part of a falling wedge? Because falling wedges are bullish patterns. The whole pattern is a downtrend. And until the downtrend breaks, it's going down. So it's like, unless it runs out of time with that trend, it becomes a really important situation. Like, look at this one, for instance. When it first started, it did everything it could to try and keep with that trend. But when it broke, it was all over. So that's the interesting part. And then, oh, God forbid we exert all of our energy getting to a trend, we won't have any to break it. It's physics. And that's not what happened there. Kind of, a little bit. You could argue for sure. But it's, as I said, what are we going to do? Step on top of the green zone and end up in the red zone? Because I'll tell you one thing right now, the people that have a short trade from that high, they're not even halfway in between that range. And that's risky. Not even halfway yet. And it's like, where I have the middle marked, that's the middle of the price, not the middle of the range. Where we end up could be the middle of the range, if not the red zone and beyond. So I'm like, that's just a good point that I would say, oh, it would have to be in the report. We'd have to have considered this to be able to take action on anything else, right? It's like, okay, for sure. And it's like, we got that out of the way. So all of our decision making had this in mind. And it's like, okay. And that's being able to explain yourself, right? So it's like, that's then you don't have anything to feel, because you've got everything checked off, you've got everything done, and everything that should be. And what that checklist changes every day. Like I say, the key to trading isn't one key, but it's a chain. Which key is used every day, or how many keys are used every day to each profit or opportunity successfully captured? It depends on how many opportunities you're aware of. But if you're not aware of many opportunities, then you can't find many. And if it does, it all starts out with familiarizing yourself with the opportunities the market currently presents, because it might do things differently now than it has before. And it all starts with understanding what it is doing and how it relates to what it's done before and where it relates to, it's done before, and just taking all the variables. And if you have a chart that doesn't have any variables considered on it, like this one, there's a lot less to consider, right? But the more variables that you can consider, the more things that you can remember, trends that we've used in the past, like previous uptrends. You could say, we'll never touch that trend again. But it is the last trend that we had that was anything like this one. And looking at it, it was also part of a 5-wave move. But what did it do when it ended? It was an ending diagonal. And just by looking at that line, it reminds me. Sometimes I turn them down to take the emphasis off them, and that's fine. But by tomorrow, I'll most likely have removed that line. It should be removed. If I could put a timer on that line to erase itself in 3 hours, I would. But I can't. That should be a function, though. I think so. And like a line like that, it would be extreme if we ever got back to it again. And you know, it's not like my expectations don't consist of it making extreme moves just because I want them to, you know, but because they're supposed to, right? And that's one major thing is, you know, you develop your wants based off of things you can explain, things that you're clear, that you're comfortable with, and things that are clear to you, because those are the only things that, you know, you'll understand, and that you can increase that pool every day. Like I focus on trying to increase that pool every single day, that familiarity with the environment that the market's in. So if it ever dares to make this kind of stuff again, who's going to remember it, right? That's the idea. And you know, that's developing a relationship with the market. And if you wanted to look at Apple all day, you know, we could figure it out just the same way, but you know, there's more value in trading the Nasdaq futures contracts than there is in trading shares of Apple on any broker. And you know, we can you know, definitely for most people it definitely is at the very least. Institutions and such maybe not, but yeah, the chop we're seeing now is, you know, they've taken that, you know, how we saw a nice ending diagonal earlier, and it has a 3 drive at the end of it. Look what they did here. What is this, 12 drives? It's like it's taken the mick out of it basically. It's like it's very consolidation like for the imbalance as well. Consider what they're doing to the 188 people as well, the 61 people as well, the 61% retracement of the entire downwards move. Let's take a look at that. Like from up here. Okay, that's terrible. Here we go. From up here to down here. Put a fib set on there. Where we at right now? We're at the 61. The 61's right here. And 61 high of the node, red yellow line, middle. Like it's just like, it's like, yes, the middle. Like it's like, this is more middle. Like I like put the mid level there and it's there. It's like, this is the spot. And it was the spot that it all started, and we talked about that. So it's fine. The day it's never been the best price for anyone. Maybe on a trade that they sold, but throughout the day it's a very middle centralized area. Now the funny thing about it is it will leave this area. That's the most important thing that it can do. The most important thing that we can be interested in are things that can tell us when it's going to leave. And you know, I had a lot to think about in that area. Now we're almost ready to leave, so it's perfect. And it's like we came to many conclusions, like the 61, the high of the node, the POC, the middle of the range. The fact that we did this move out of this right here, and this was a channel that doubled more. It's 261 here, and I did this on the other chart. Let's look at the chart. Other chart here. Essentially, the range did change. I mean, that line right there, I'm pretty confident that it was a range that operated like this, and that's fine. Oh my goodness, no way. You know where we are in this range? We're in the gray bar again. It's crazy. 341, 361. If I take off the regular fib set there, this level right here was the gray bar that held us down from yesterday's high. Controversial. Probably the most controversial level, and I love that it's a short-term level because it's at its ultimatum point right now. Like it made a head and shoulders here, right? And it might make an inverse after it. That's fine. There's a VWAP there, so that's a support level. It's right in the middle of a gap too, so that's also like a barrier. Not only is a node like a barrier, but a gap can be too. If it's not busy rejecting it, it's busy running through it, basically. at the end of the day, it's very rare for it actually to spend time in a gap. You know the best time to spend time in a gap? Tomorrow, when nobody even knows there's a gap there. That's the best time to spend time in a gap. So it's like, it's not clear for the people at tomorrow that there was even a gap there unless they look, and many people ain't looking. I don't like to look either. I'd rather mark it today so I know where it is tomorrow. And I like to do that with little zones. But it makes a lot of sense just to mark it in there. So like this is an area that has literally just avoided volume. Like somehow they've managed to, only the volume that they've managed to put in there, it's managed to be very quick and swift. And at the end of the day here, it's been very rare that we've ever spent any time there. You want to know what's funny about that level? VWAP, one of them. And it's been avoiding it like the plague, essentially. When it responds to it, it actually doesn't take volatility away. It's a strange one. It's been kind of getting like a, I want to say like a jolt off of it every single time we've been touching it. It was the one in the morning that it kept stepping on and stepping on and stepping on. And then today we've tested it from both sides countless times, ended up consolidating on top of it countless times. And the amount that we consolidate when we're associated with it, I can't help but notice, did it not do it underneath it right there? And it was like, okay, well, time's up. No, we've done it here, done it here, done it here. And like we used to make this move, like we've done this move before. It just doesn't take that time always. But when it does, I mean, what could it mean when that time ends? That it's done. Well, every time, I'll tell you one thing. Every time that it's ever done this move, you want to know? It's always generated this amount of movement. And it did it here with absolute precision. So is it the case that this amount of consolidation is required to generate this amount of move? Like, is enough energy coiled up inside of this confinement area that when it's released and breaks one of the barriers, it can't help itself but to make this amount of movement? It's one way to look at it. True that it has been the case every time that it's done that, so could we consider it? Yeah, it's the value of being exposed to the exit of the consolidation. It could be a move as large as that one. And I mean, even when we made this consolidation earlier, it was a matter of going up and then down even harder than what it went up, just so that it could return back to the point that it started. Which seems like, an awfully like ridiculous way to go sideways, Why would it make it so difficult for people just to be part of it going sideways? Doesn't that sound tough? They'll think twice tomorrow. That's the funny part. After making it so difficult today, tomorrow it's likely to move from technical level to technical level on the volatility that's increased, and it's likely for it to be difficult for it to do this until after the report, and chop and chop and chop and chop. But the thing is, this range coming to an end because we have to pick the node or the gray zone. One of them's gonna have to end. Whoops, because it can't spend any more time inside the node and underneath the gray zone. So what does it like more? Retaining the resistance of the red, or sorry, of the gray zone, or the support and resistance confines that it's created in this area? Whoa, 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 whoa. That's the Dow? Hold on a second. That's, okay, no. I was going to say, they must have not loaded in. I thought they were at the low there. It showed me the low. Okay. I was like, did they not recover? Because look at the SPY, the 261. Everything was bought back up to it, and it's nearly back at its B point. Oh, it did hit its B point actually. That pattern really worked out quite well. Yeah. I don't think I posted. Yeah, we looked at it earlier, but I didn't post. I gravitate more to the chart that has more current information on the existing range. This one is very indicative that the imbalance is coming up very shortly. Like, how many more patterns can we fit inside of this area, and is this area destined to be the centralization for the imbalance? Because it is only centralized in every single area. Like think about it for now. It's on the daily, centralized right in the middle, of this range, exactly at the 50. So if you put a fib from the high to the low, you'll find that we're at the 50. And then you go to the, the hourly. Oh yeah, you can see still we're in the middle of that. That's the same move. And then here, we're in the middle of this giant area where the sideways consolidation that spiked out of the top and then had to move out of the bottom returned back to where it all started and the beginning of the day. Let's take a look at actually the daily and just look at the candle for a second. So it reads as being up on this though. What does QQQ say? Yeah, QQQ will leave people thinking a little bit differently. The candle literally looks completely different because they don't consider the information that's happening between here and here as important. So people don't put any volume into it. Yet there's like an entire marketplace for all of that volume overnight. And
161 on the daily.
The 161 on the daily? Yeah, I think it's going to develop a little bit more. Let me look at the this chart here real quick. I'm going to have to short term stuff here. Oh, on that B point in there, yeah. Actually, nope, got it on the 60-minute. That's the 61 or 161 that you're looking at there.
Yeah, that's the one.
Now,
There's a chance that it goes up to that line, right? And then maybe tomorrow morning, and then comes down from it.
yeah, like I like the idea of it coming down from this level to hit that level, but it's like a small short-term hedge can be taken for a pretty decent profit. And it's like, I think that on the short term, we can gauge whether or not it's appropriate to make that trade when it gets there. And if it's not that same movement, I think we'll see it from the 261 down to the 188 if it blows right through it, because it's a possibility. It might blow right through it and get to this point. And what that would look like, if it blew right through that and got to this point right here off the SOW in phase B, so that would be SOW in phase B all the way up past the BC to a new high at UT. And that's what that could look like. It could actually go even farther. It could go past this BC apparently. So I'm like, that's powerful. If we can get beyond that point on a trade, that's the value of being long and actually holding it still. It's like, that's huge. And it's like, it's only going to get more increasingly difficult to continue holding to the upside for the short-term traders, because it's likely that when we do pull back, this will be part of the consolidation. So it's not like when you get up, it's like if you're long in today's move, and we get up to a point where it threatens a reversal back to the entire B point on the daily, and you're above it, it's not worth hedging that position. It's worth cutting it and trying to focus on the other direction. So it's like if you know you're going to be part of the retracement anyways, don't wait for it to come back and get you. You know, you want to get out of it and focus on trading from the extreme and then hedge that, because that's the best way to go about it.
I'm just gonna put alerts too on the 188, 200, and 261 there too on the higher time frame. So when we do hit it, then I'll know, right? I won't have to go back to the daily to have a look at it.
Yeah. Well, that's another thing too. Like, and if you find that you're ever in a position where this is like a bearish pattern, and it's destined to return to this. Oh, what's going on there? Oh, it's here. Nothing to do with AMD. I'm looking for a blank chart, but the the idea that we can make a W and we get if this is a daily and you're in from here and we're coming up to a 188 that could be a little higher, let's say, and that you're trying to get exposure to the return back to the middle. Well, you use this position for now uh, to develop a hedge against it. And shorting and shorting and shorting, it might be difficult. It could grind the high like we've been doing on the day right now. Like, it's could be really difficult when we get to that high to get exposure. But you use this long to make sure that it's good. When you get a position where you're like, okay, I'm in and it's dropping and it's good, I can keep my stop at the extreme. I've paid myself. You cut this. And then focus on hedging against it where it's appropriate. Because now that you have the extreme position here and it comes down to the middle, you can afford to actually trade back up from the middle because it'll be a hedge. You won't actually just be starting your position from the middle. It'll be reduced risk because, if it gets down to a 61 or something like that, you can actually justify taking it even though it's not at the extreme because you're short still. So that's a really important tool for if you're late, you can still keep that and hedge it to the point where you've got a position, but when you get that position, you can cut it. And because if it's going to come back to the B point, it's not worth holding a position above it. It's worth trying to get that exposure against it so you can get this movement, and then you can focus on trying to catch the 11 low zone as a hedge and not just as somebody trying to go long in that area, because it's going to be tough, right? Like an 11 low zone. And the idea is that you're long from the clear zone down here, and you can have it come all the way up, and then you can hedge it at the high and just take profit. And it doesn't matter if you take profit here or if you take profit here. But if you're trying to go long, it certainly matters. It'll be very tough because if you're trying to keep control under that environment, it's tougher. But that's the thing, because like down here is the daily lows, and if we were to make some sort of movement like that, it would just be satisfying the B points that are not hit. I can't help but notice that it made 3 consecutive highs and it's returning back to the first of the 3 highs. Well, we didn't make a really higher high the second time, but it's trying. At the end of the day, there are 3 highs, and on that third high, we made a new trend. And it is a completely different trend than that other one. But I tell you, that's some 5-wave move there. Do you know that it technically does fit the components of an ending diagonal, yet it is like it's terrible. Like it does have 1, 2, 3, 4, 5, 6, 7. It does have 1, 2, 3, 4. Oh, 1, 2, 3, 4, 5, 6, 7. Exactly the same amount of trend breaks with a lot more trouble in this one. But it starts off by making this advancement and a pullback, and then it gets into this area where it's doing this very, very unforgiving third consecutive high. And it's all on top of an uptrend. It's, essentially it's made major reversals at the times that it did on the other pattern. These are all of the reversals required to make this pattern. But you really got to understand this pattern to see this, you know, as anything similar. Because, like, look at the thing. And it's not even supposed to have the same result, which is ironic because of its positioning range. I don't think it's going to have anything remotely similar, to be honest. But it is similar. That's what's funny about it. Even though it is similar, doesn't mean it works the same way, though. At the end of the day, the one most powerful pattern that I think there is in this area right here, not only the 261 or anything like that, but this triangle between the support and resistance, the most controversial trend lines on there. You know, we've just exited to retest that triangle prior to the imbalance, which I think they'll have full control over. I think that everybody's right where they want them for the imbalance. Looks like it. Sometimes I can see they'll be in the way, sometimes they won't be. They don't look like they'll be in the way here. Curious to see what the imbalance brings. It could involve them leading on that the third drive is going to take people out and it actually reverses into a new high. That would be something of a squeeze, and I think that they're interested in squeezing people because you can see the only thing that they gave the people to recognize this is a third drive is just that first high. That's it. They got the retest of the triangle if they were, you know, watching for that. And I mean, many people will not draw that trend line. They'll draw the red one. So retesting what line for them? So it's like, you know, it's very interesting because that red line is a big difference. It's a huge difference to my line. And you can see how they treat my line. When they broke it, they broke it. They came back and they retested it. They like it. You know, and they like that over the 261. Find that that's apparent soon. The people that are getting the 261 are in danger, and that's been apparent since the beginning of that 261. So, I mean, it's a level that's been very, very, you know, effective lately. And, you know, right now I think that it could lead to a fake out. That's my suggestion with it. A fake out that might get us the equal distance on both sides of the triangle. And it can be quite convincing too, like sharp and quick, make people try and chase it. And as soon as they get in, it'll reverse on them. And an appropriate place to do that could be POC. Like, think about it. Will it be the same distance out the top of the triangle as it is the bottom if it tests the POC? And how much time will it need to take in order to make that the case? And if nobody's in the way, it doesn't need to happen. It's just something I wouldn't drag your stop into the tip of the triangle if you're long. I mean, I wouldn't really focus on hedging it yet. We're not even halfway through the range yet, but you know, hedging it for the imbalance is an option, but depends on your positioning. Depends on your positioning. Getting a safe stop and profit for the imbalance reduces risk. You're holding a core. If you get your safe stop and profit on your core and you find a hedge and also get your stop and profit on that hedge, there's no better position that you can be in. And that's okay. But yeah, no, it's like, it's crazy that, you know, after all it wanted to do, to come back to the middle and just chop the crap out of everyone. You know what this does to most people is it means that what they've got in here, when they see it be so profitable, they watch the profit and loss the whole way up, and then it comes down on them, and then they continuously see it given and taken back, given and taken back, given and taken back, given and again and again and again. And essentially, it plays with the mind of the human being, and it makes them give up their position. As I say, consolidation invites capitulation, which, you know, as the day gets closer to an end, you know, the trend gets steeper and the risks of being exposed to high volatility at the imbalance, you know, inflict fear because people don't understand what's going to happen on the imbalance, and they don't understand that they can take a trade against it that could they could reduce the risk of that time. Now, it's not necessary, but it definitely can be helpful. You know, if you have the ability to position yourself for that imbalance so that you're safe by taking a hedge, there's three things that you can do to increase your safety. You can take some off so that you're paid no matter what, which is, you know, It's a good thing to do. Make sure you're paid for this move if you haven't been already, if you're in on it. And essentially, another thing that you can do is put your stop above your average price, and that secures some profit guaranteed if the event that the market crashes on the imbalance, which it's unlikely, but it is physically possible. But I would say it's not just unlikely; it's very unlikely. But at the end of the day, the third thing that you can do is hedge it. You can take a position against your position. It could be with half of your position size. So let's say, for instance, if you've got, 1 NQ from the bottom, you could take 5 MNQ. And that gives you a lot of flexibility if it comes down, right? And if you get your stop and profit on that 5 and take 2 off, paid yourself a little bit on the hedge. So if it comes back up and gives you an opportunity to get those 2 back or something, or if it stops you out with a profit, you can get your 5 back. You've been paid a little. So it's like, you repeat that process 12 times, don't be surprised if this stop isn't so scary to get hit anymore. Because that 5 that you're using, if you've completed it like 7 times successfully, who's to say you can't take 6? You've earned it essentially, and you can trade within the profit that you've made hedging to be able to say that, hey, this is an appropriate time where I can take 6. I don't just take 6 because of it, but you could justify an area where you could take more. Might be 7. I'm just saying. It's just but if you had to explain yourself, you could write a report about it and say, hey, I justified being able to take more because I made more, and I can take more because it's within the profit margins of my last trade. And I took more outside of my regular amount of trading or regular amount of size because it was appropriate to do so because why? And I'm like, okay, well that makes sense. If you can explain why, then you're good to go. Then you can do it. You got nothing to worry about, right? And that's the that's that the key at the end. You've got nothing to worry about. That's what I said, and that's the way that I think about it. And that at that point, every single negative emotion in my body is eliminated. So a lot of people struggle with that, and I mean, like, that's how I do it. You know, if you can explain yourself, it's really difficult to keep that worry, and the worry is negative, and it's like, it's what you do when you don't know. Anybody that doesn't know is worried because they don't understand the outcome. But if you set a clear risk reward profile where you understand exactly what's going to happen to you in the event that you're wrong and you're comfortable with it, because the reward is that much greater, then you can take that risk because it's worth the reward. And if it's not, then you want to watch out, right? So it didn't quite get into the triangle, but I'm not complaining. If you didn't drag your stop near that area, you're looking pretty good. We're almost back. 78% of the entire dump has been erased. That's nice. 361's in line with the 88 at the top there. And we just ran through that little gap there too. It was a little bit of a resistance, caused the retest, and the retest continued. And like I said, the ending diagonal from before can have a completely different result. Now, one thing that's bothering me about it is every single 3 drives today has come back to the last 3. I don't care if it's made 9 drives. If it has 3 at the end, 1, 2, and 3, it doesn't care about the fact that this worked, that this worked, that this worked. They were all different patterns. It's got a 3 drives pattern that isn't tested. So it makes it very risky to drag your stops above the red yellow line. What if it gets a double retest? Costs you your position. Terrible, right? Not to say it's worth hedging. It's just something that you want to be careful with, because in the event that it just makes a quick snap around, you don't want to lose your core position just because of a spike. And it's like, now that we've knocked out that line, what about the next one, the red one? That's the one that, technically it is like the red yellow line now as well, because the other one's broken, so it's no good anymore. We're going to take it away. It's only good for retesting, and I'll make it orange, like a burnt out red yellow. That's the way I look at it. At the end of the day, until we break that red yellow line, we will be in an uptrend, or sorry, in a downtrend. And this uptrend right here is getting us there, and it's steep as any. And I think that its longevity is incredibly limited. Anything that we do beyond that red yellow line is likely to be taken back on the break of the gold one. So it's like, I don't care how fast or hard we push right now, everything that we do on top of this steep trend is subject to coming back down. We have to watch out for that. It's not good. And maybe not even that much, but just like, anything that we do beyond it is coming back to it for sure, just like we saw here. And I'm like, okay, that move you can trade for, and you can hold some to continue to this level. But this move, it must be made safe. In the event that you take the retest back to the red yellow line, got to be safe. So it doesn't matter if you're because by that point that you get back to the red yellow line, the trade's only worth taking if you can take off enough profit to make it safe to continue holding. So like if you take 3 and you take 2 of them off at that level, the last one's safe to run down to that in theory. Because if it comes back to stop you out, you've got the profit of this and this. And technically, in order for you to become a loss, that trade has to go to here. So you'll be left with this amount of profit in the event that it goes south. But you still have your exposure. You've earned it. That's the least amount that you can use to be able to get that to work for you. You know, it's like when people trade with one contract, they don't have that flexibility. You know, it just doesn't exist. You can't take any off. You can't acknowledge any level. You know, take some off at a level and let some run. That's a huge ability to be able to do that. You can't even take half off. It's very rough. You can't even hedge it either, because what are you going to hedge it with? The entire position value, and that's like just an incredible risk that has to be taken on. So it's best to build up a cushion and then trade with the flexibility the market intends us to, which is technically trading MNQ against NQ. But doesn't have to be that way for beginners. And I wouldn't recommend it's that way for anyone that hasn't practiced it. You know, of course, doesn't matter if you start with 500 or 500,000. You know, you practice to begin. Because how are you supposed to know what to do? Just like if I was to offer you, the ability to fly a jet or something like that, but you had to go now and no teaching or the teaching, it's like you probably want to know, and they're not going to help you while you're up there. You have to know what you're doing. So it's like that's tough. You'd rather get the lesson first, of course, and you don't want to learn the lesson the hard way, because it's probably not something you're going to come out of, and that can be the case in finance too, just in a different way, non-life threatening maybe, but it's very critical. It's best to learn lessons before you jump in the plane the end of the day. And you can. It's like, oh yeah, you can go simulator first. We'll show you how to do everything, or you can jump in the plane right now. It's like anybody can jump in the plane right now with this thing, and a lot of people do. And the experiences sometimes can be so hard that they can't work out of them. Or they're not inclined to. So it's best to understand thoroughly before you take any action. That's where I come from. The motto of everything is to make sure that you get a clear understanding before you take action. And you know understanding the value of what is the most attractive thing to be exposed for might be hard, and it might take a long time and most of your day and many tries and many times to trade against the short-term trend, but that is maybe what is required in that environment to get that exposure. And if you know that exposure is that valuable, then it's worth fighting for, and that's the name of the game. And making sure that it's safe while you're doing it is is huge. So each time that it hits a short-term target, making sure that your exposure for the long term is absolutely safe, absolutely a great way to go about it. But you have to know where it's going first to be able to target it, and that comes with understanding the market and knowing what it requires. Because like I used to say, I believe that the market there's a way the market is supposed to move. Like it's not a matter of opinion, but a matter of expectation. And those expectations are based off of precision math and yeah, well, it's not math like you would think it would be, but geometry and distancing and portions and shapes and simple math. And people try to make it far more complicated than it is, and I suspect that's why it doesn't work out. And it's like you'd look at my chart and think it's complicated, but I'm like, it's grade 3 math. It's just everybody doesn't choose to understand it. It takes not very long to really understand what each color means, what every line means, what every indicator means. It can take less than 5 minutes for me to explain any one thing on the chart. But any human being that looks at this chart assumes that they have to understand everything at once in order to be able to understand what we're doing. Yet when I went over it earlier, my focus is only ever over one thing at any given time. or a collection of things at the same level, which make that level, a level of confluence, a level that has a bunch of barriers added, or so on and so forth. Now we're almost at the red yellow line again. So it's an 88% retracement right now. The 361 imbalance is right around the corner with less than 3 minutes remaining. And that means that directly any trades that happen from now on out are directly exposure to the imbalance. And literally, unless you caught the high of day, there's no short trade that has survived that oh so bearish environment that was there earlier today. But the thing was to have bought anywhere in the dip and you would be profitable as of now, which is interesting. Yet it was so difficult for anybody that was right. That's the funny part about it. And it's involved many patterns failing. Like the first time we hit that green zone on the bottom left there, is it not on the failure of an inverse head and shoulders? Here. So we made a left, we made a right, and we made the right, and it was like, whoa, it just didn't manage to formulate. Now, it let anybody out that took that trade back with their average price multiple times. So it's funny to me that the people that would trade the pattern that would fail were allowed to get back out of their position multiple times before it actually continued to fail. And it's like if you don't see that there's something clearly wrong with it by the time that it's failed and come back to your trade, if you're still thinking it's the same pattern when it's got this whole gyration out of it and it's completely different, it's like you're trying to rekindle something that that sounds like hope, right? And it's like market doesn't like hope; it likes certainty, and math and actual numbers like that matter to the market, which are distances. Any number that we have on here, it's just a representation of a distance. Like the 188 and the 200, they're just distances away from the 100. That's all we're just using those numbers as like markers to understand how far away we are from the existing consolidation, which always ends at the 100. And the 100 is where we end the consolidation, where we leave the consolidation and we carried on to make a new move out of it. And that new move runs into these new barriers like the 261 and the 188 and so on. And oftentimes returns back to the 100. And it's like there's B points since before I was even born. We haven't even hit yet, which is kind of interesting to see that the market is capable of leaving B points and not essentially caring about them. And it becomes like, are they still in play? Like there's still gaps as well that haven't been filled. Now here's the imbalance. A negative response could be on the table. Volume increase on the imbalance. I'll watch out for that to be a little bit of fluff there. Just basically stopping everybody out. The entire imbalance push is subject to getting wiped out. Ultimately, the red zone has not really gotten its full amount of usage, and it used to be used back in the day. It wasn't something that was plotted recently. So, seeing that in action could be quite interesting. Now remember, the last time that we were associated with the green zone, it spiked specifically out of it. And that spike, we might see from outside, from the inside to outside. Which I can see there's already like a gold dash line up there, roughly in that area. I was checking. There was a triangle that I saw earlier. I've since removed. Okay. What's that? I leave this there just to remind, about the fact that we have the counter trend move, and it did happen again, and it made that fifth wave pulled back to it's a little bit more maybe, but that's okay. And this line back in action again at the end of the day. Yeah, it's rivaling that red zone in the morning for the end of the day. All the B points have been filled. Now I consider a new line here. That's a line I believe there's no stop safe above. Notice it was like a rising wedge that failed. It's like, look at how this first blue bar played out, right? And like think about where its green bar was. And like how it slumped to it, and it was like, oh yeah, it's terrible. Barely even moved anywhere to get to it, eh? And then it went like this to get off of it. Which, I mean, that same kind of like we could see in the past here. The difficulty for the people trying to catch the long was almost for the exact same time and distance as it was for the people here. And then the people of this trend, having just seen what happened on the last time, boom, never to really give any kind of problem. The same thing over and over again with a complete different result. People that had the guts to continue going after this pattern just did that are the ones that are in this. That's the reality of it, which is kind of intriguing that the market would put people through a pattern that had the exact same ramifications, the exact same median bar, the exact same distance, not the same angle, but very close, and both part of a downtrend. And then it would coast down to a point that ended yesterday, and it began one of the most controversial points of the day today. Yet anybody that tried that level first was wrong and wrong and wrong, and then they were allowed to be right. Why so difficult? Why was it so difficult here to find the reversal for the first? And then they had to continue persisting. But to the person that, or the institution, should I say, they convinced people to buy here, and they started their buying as soon as it hits lows here, 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 and they keep all of it, piecing it off at small levels like this as you go. Because some of the bad shares from the beginning can all be sold here. That's if they even sell any. I don't even think they do. Not an environment like this. Not when they make the market lead their positions this profitably. This is a way to convince people to try and attack the market long and end up with them getting stopped out, giving you their position, and then you riding it to their target. That's the brutality of it, really. But it has to be done, and it's just going to be done in different ways. Not always like this, but tomorrow's way to band the people together to get them stopped out and then take their position to where they wanted it. Oh yeah, be doing it. And then making patterns that otherwise really worked in other effective areas. Like, I don't know if this was exactly the same as this one, no, but I am sure we've seen it work in the past. How effective it was for these people. Subconsciously, they'll see that same trend. People plot it in, they don't even realize it's part of the same pattern. And it is, I've started to realize that the same angle can be used multiple times and it'll have different results each time it breaks. But they can be expected to be different based off of where they are in the range. It's not just random. It's not a bad thing, it's a great thing. Because I think it's different in particular ways. In very, very, very particular ways. And it's like so particular that there's no room for other strategy amongst it. I'm like, how do you end up with the best price if you're not taking these things into consideration? And how do you keep it to the best price if you're also not considering the target that it relates to? And I mean, like I said a million times, at the beginning of the day, the major play that we're in right now is to be on the journey in the Wyckoff to the UT point, which is here. Finally, just remind everybody about this idea on TradingView. You can check it out there for yourselves as well. But this has essentially brought us up to this point here now too, and we're almost out of that range altogether. But that is the closing bell, and essentially we're finishing here at the high of day, and overnight we should see a test of that blue and white line. But hopefully you guys had a wonderful day, and I'll catch you guys later.
Sounds good, John. Appreciate it.
Yeah, anytime. Take it easy.
See you later, guys. Thanks, man.
Yeah, anytime. Have a good one. Cheers.